All right, welcome everybody. So today, big Super Bowl for us Tesla investors. We've got the Q2 earnings call about to be, shown. We're gonna go ahead and follow along with the live stream that happens at 2:30 Pacific time, 4:30 Central, 5:30 Eastern. We'll do that, but in about 10 minutes from now, they will drop the financials. As soon as they do, we'll open that up and we'll start evaluating that. We'll also look at the questions from the retail investors, what was voted up as the questions they want to have answered. And then we'll also watch videos and talk about, the big reveals by Elon and Ashok yesterday. 12.5 came out and Elon was interviewed by Jordan Peterson. So I've got Jeff Lutz, Mr. Incredible. I've got CERN, the financial bull, joining us as well. And we have Larry, the golden bull. Welcome, guys.
Hey.
Hey, guys.
I can't stop looking at GM earnings. It's like a car wreck for me on the EV side.
Oh, man. Anyway. Oh, my God. How does Mary Barrett... I guess now that Biden's no longer going to be there, she can go. This is staggering.
Well, let's not talk GM right now, unless you guys think that there is a correlation.
We're waiting for Tesla. We're waiting for Tesla.
Tesla's earnings. So tell me what you guys think. So Q2, what is the number one thing you're hoping for today? What you're expecting? Let's start with you, Jeff.
Honestly, I'm hoping that they've stabilized cash, they've stabilized gross margins. But honestly, is this 60 cents earnings? Is it 55? Is it 80 cents earnings? I don't think it's going to move the needle meaningfully as much as what they say about the business going forward. Maybe near-term guidance a little bit, but more for the second half of the year. But more so is are these massive industry-changing transformational projects on track relating to robotaxi, humanoid robots. So this is really the company. Honestly, this is a new book. At the same time, we don't want to run away from existing earnings. We have this significant move up in energy deployment. Is that a one-time thing? Is it lumpy, or is it just are we on a new plateau? What's the status of the Roadster? I think it's the thing that most people are concerned about. I'm just kidding. That's the top voted thing. But yeah, it's really a little bit less granularity and a little bit less resolution so much on the penny by penny on earnings, and more so have we meaningfully troughed. And I think, again, the giant elephant in the room is this transition to robotaxi on track? We got this big release that dropped overnight on 12.5. And what does that mean? And are we largely on track for this reveal? When's the new reveal, and so forth?
Thank you. And then CERN, what are you looking forward to, and what are you expecting?
I think I would echo everything that Jeff said. In addition to that, I think any new learnings we can get regarding FSD would be helpful in terms of take rate and so on. I'm sure we're all very excited to learn more about energy and how that business looks. There's Tesla's disclosures on the energy business are not as full and complete as we would like to see. And I think that's fine when the business is small, but the business is clearly becoming quite large and growing rapidly. So we would all like to learn more about that. And as Jeff said, I think we would like to learn more just about the trajectory of all these future businesses. If they're going to start making bots, where are they going to make them? Will there be a new bot factory? What are the plans around that? And maybe this quarter isn't the time to announce all that, but just anything we can learn about those items, I think I would be excited about. But in the meantime, I've got my Tesla earnings call bingo card here. So that'll be fun to play along as as they say some of these words.
I love it.
Yeah.
Okay. Well, we will showcase that. So let's I'm kind of prepared. Here you go. Look at this. So we've got your bingo card here. Hold on. There you go. There's your bingo
Yep.
card, right? I don't know if I like your FSD 88 one better, because this one seems to be much more about these words that he's going to say: unforeseen challenges, next phase of growth, as opposed to actual things that might happen.
Yeah, I decided to keep this one a little bit lighter, maybe more fun, just in terms of some of the statements and words that Elon or other executives might say. But some of them, are pretty serious in terms of the 4680 batteries.
Let's see, where is it?
Any indication there that they've resolved many of those issues, I think, would be welcome news. As I mentioned, the Optimus factory, the Robotaxi unveiled date, I think that's still an issue. When is that going to be? A discussion about how many vehicles they think they will be able to deliver this year. I think that would be quite interesting.
Good one. Yep.
Are we on track for 1.8 million or something less or something more?
What do you think, Larry? What do you guys think?
Well, I'm really focused on which Elon will turn up tonight. The press reaction to and the public reaction to earnings is always governed, I think, by Elon's mood and response. I mean, the last earnings call was really an excellent call. The shareholders meeting was an excellent Elon presentation in terms of his responses and his positivity. I think that if he turns up and doesn't, get truly bored by these ridiculous questions, I think that that will be good. I'd like to see, of course, all the above. I mean, everything Cern's mentioned, everything Jeff's mentioned, all very important. We really do need, because earnings are so far down and lagging behind what we all thought would happen a year and a half ago, we need to really see this new book. We need to see more than the cover. We need to get an inside look at some of the pages, at some of the chapters, at some of the pictures. We do need this information, and an upbeat Elon dealing patiently with the questions about that will go a long way towards restoring confidence. I think there's a general sense of confidence building in the marketplace for this future that Tesla has promised. And I think this is a crucial meeting to maintain that tempo. Absent that, if we skip a beat at this point, it can take a long time to recover. And I'm talking for all those shareholders who are very anxious about the short-term price of the stock. I remain very long-term. I remain very confident of the company in the long term, very confident of the management of the company, very confident of the board. But I think from the share price point of view, it is going to reflect Elon's mood and sense of commitment.
Okay. I am following the website. As soon as this drops, we will take a look at the actual. Oh, where is it?
You have to refresh. Sometimes it just doesn't come by itself.
Hey, Brian, how are you doing? Welcome.
I'm doing great. I hope you can hear me all right. This is a very exciting day. I want to agree with absolutely everything Larry said. I want to see the same Elon we saw at the shareholder meeting. He was refreshed. He was in one heck of a mood, and the mood was contagious. We all felt it. And if we see some great stuff here in a moment on mega packs, we're going to be excited. If we see that capital outlay hasn't been too crazy, I think we're going to be excited. because we've got all the pieces to keep this moving forward. We just got to do it. We just got to move it forward.
Okay, so
let's
the
see.
actual deck has been revealed. Here it is. So, boom. Wait, am I picking the wrong thing, right? Hold on. Thought I dropped it. Are you guys taking a look at this?
I am standing next to a trash can.
Okay. I'm just opening it up right now.
Gap
Anything
gross
new?
margin.
Mhm.
Gap gross margin 18%.
Okay, good. That's the critical thing, right? Gross margin 18%. Because if people said that it was long over 16%, would be fine, right? What do you guys think?
This is total gap. So I don't know. Looking.
Look at autos.
Total auto. Yeah, I have to get the auto.
Fourth page.
Okay, let's take a quick look. So 1.6 billion GAAP operating income, 1.5 net income, 1.8 non-GAAP net income. We achieved quarterly revenues despite a difficult operating environment. Record quarterly revenues. The energy storage business continues to grow rapidly, setting a record in Q2 with 9.4 gigawatt hours of deployment, resulting in record revenues and gross profits for the overall segment. We also saw a sequential rebound in vehicle deliveries in Q2. That's great. Overall consumer sentiment improved. We launched attractive financing options. We recognize record regulatory credit. Lots of records here, guys. Global EV penetration returned to growth in Q2, taking share from ICE vehicles. We believe that a pure EV is the optimal vehicle design. Progress continued for AI initiatives. We reduced the price of FSD, launched free trials, demonstrate
Wow,
success.
look at the operating cash flow. Wow.
What about it? 3.6 billion.
3.6 billion. That's
Did they say? Can you guys look for the increase in FSD attach rates? Did they report that?
no, they don't normally put that in the press release. That's yeah. Well, it may be. Maybe.
So they reduced the COGS. Jeff, did you take a quick look at that?
I'm
just
getting
gonna go
through
right
it.
to the. Yeah, okay. I'm just going to go right to
Go
the
to
highlights.
the revenue and
I'm going to look at the outlook.
income.
Uh,
The revenue and income. Where's the income statement? Go back to page 4. There we go.
this one.
You just missed. Yeah, Q2. So we had 19.9. Yeah.
Where are you looking?
For total revenues, 25 point. Total gross profit, 4.578. Total GAAP gross margin, 18. 9.9% high. Operating expenses, 2.9 million. Income from operating is 1.65.
So
Adjusted
earnings
EBITDA,
fell.
3.675.
Mm-hmm.
So EPS 0.42, EPS attributable non-GAAP 0.52. It's a big miss. It's a miss of 10 cents gap. Where your cursor is right now.
Mm-hmm.
EPS non-GAAP fully diluted 0.52, and we had 0.62 is what the street was looking for. 0.65 is what I had.
What's happening to the stock?
I predict it's on its way down.
The restructuring charges were 622 million.
Yeah, I had 500,000. 622 is high.
It's after hours is down by 2%.
Yep.
2.8%, yeah. Bouncing around. This is honestly going to come down to what he guides on the call.
Yeah.
Okay.
Yeah.
If we
But the
look at
cash flow is incredibly high. I'm quite blown away. I wonder what the gross margin on energy is. Could you right at the back? It's going to give us a
where
I believe it was 24.6%.
Okay, plans for new vehicles remain on track for start of production in the first half of 2025. Okay, there you go. First half.
Notice it says vehicles with a
Yeah. These vehicles will utilize aspects of the next gen platform, produced on the same manufacturing lines. Less cost reduction will result in less cost reduction expected, but will grow vehicle volumes, enabling more than 50% growth over 2023 production. Capacity
Or
close to 3 million. Okay.
before investing in new manufacturing lines. That's a pretty important statement.
So in my turn,
And we've got a real quick thing to mention on that, which is that there is a whole lot of surplus capacity in both Berlin and Texas that they are
Right.
eager to get into. And if you can make a intermediate compact, a model just under 3, a model just under Y, and get volume out of that, it's a smart thing to do. And I think they can do it a lot more quickly than building a whole new vehicle, especially if a whole new vehicle's got a whole new set of design philosophies. If we're just trying to make one that's an A class, a 1 class, like you see with BMW and Mercedes in Europe, I think they can do it.
Yeah, I think you're exactly on target. And it's pretty clear now that they're producing a car in 30 seconds. In China, they have excess capacity in China, quite a significant excess capacity in China, because they had a capacity of over 1 million. With this reduction in production time, one must assume that capacity goes up to 1.2 million. They're only selling 800. They've got this 400,000 car capacity.
what else have you guys found so far in the outlook? I didn't see anything that was interesting. It's all pretty basic. You want to take a look at the charts at the back there? So global BEV market, China. Anything interesting here? Return to growth in Q2. Is that a big deal? That's a good deal if it includes China.
We knew
right?
that, though. We did know that. Yeah.
Okay.
I think the big cash number is coming from the outsized energy deployment, and then autos going from 28 days of inventory to 18. So that's just going to
that's the leverage. The increase in energy deployment is not really because the total gross margin didn't grow that much. The global gross margin didn't grow that very much, so it didn't have an impact on cash. I think inventory had the biggest impact on cash.
Yeah.
Now, does anyone else think that we might see an increase in inventory buildup in advance of a Model Y refresh, where they try and get a whole bunch of units made so that when they shut off a line or two to do the switchover, they'll still have existing models going?
Yeah,
or
they
do we
will.
think that
They will. I don't think it's going to be on the order of 30 days of inventory, but they'll definitely, any new product launch that doesn't get distributed within that same quarter will be an inventory buildup, both on the 4-wall balance sheet inventory and the days of inventory. But I don't think too much, but definitely a negative hit. But they can say that when they have earnings for that, they'll say like, hey, we're adding inventory to build new products, and it'll get largely
Don't
excused.
rush through the financial statements. Could you go back to the financial statements? Yeah. Revenues, auto sales. Wow, look at the regulatory credits. Well, I wasn't that far out then.
Record. Mm-hmm.
25.5. Huh.
That's a record revenues.
Yeah. And their energy revenue and storage. Now that is 2.7. I was actually within.
It's 3
4.
million. 3 billion. I mean, sorry.
That's a big dip in the price per kilowatt hour. Services revenue. Yeah, the street the stock is definitely going to decline.
It's now
Unless-
down $11,
Yeah.
4.52% after hours.
Yep.
The weakness seems to me to be in the auto profit margin. If you
Yes.
back out the red credits,
Where do we go there? Where do we can see that?
well, I'm doing some math behind the scenes. If you back out the red credits, the auto profit margin is 14.6%.
That's a significant decline.
It was 16.4% last quarter.
Yep.
So that is still headed in the wrong direction. The red credits, if you include that, you still get 18.5% auto gross margins, including the red credits.
Yeah.
Right here.
Yeah. I was quite close on the red credits, but I had 19% with the red credits. And so out of whack by quite a way.
But it's not surprising if you're reducing inventory and you're lowering production, you're essentially decreasing your utilization
Right.
in the quarter. So I'm not overly surprised.
Yep.
But I guess they honestly have to guide, like, are we, is this the point of, are we truly dropped here? Is there more work to do?
Okay. The comments,
But
folks are
what's
saying
good?
that it's dropped all the way to $234. It's 12% down.
One thing I wanted to point out real quick is that with the regulatory credits, we were told 10 years ago that these are on their way out the door. Another quarter, maybe 2, maybe 3, but these guys are coming in fast with their competition, and they're not going to need to buy them anymore. And year after year, we're seeing that's not the case. GM, the true leader in EVs, has said, in fact, not 1 million. We're not going to make 1 million. We're going to make 60,000. They're going to need to buy those credits from somebody. And whether they're buying them just in the US or internationally, that pool of money is going to be there for at least a little while, certainly already a lot longer than people were thinking. And it's big money, and it's real money. It spends just like any other dollar.
Yeah, they actually broke out AI infrastructure capex, 0.6 billion in Q2. That's the first time they've broken it out, and it's almost 50% of their total. No, it's not 50%. It's a fairly significant percentage of their capital expenditure, but not that big. So they're now sitting with 30.7 free cash flow. Free cash.
Okay. Where should we go next? You guys want to look at?
Yeah, I'm really interested in this. So Q4 energy generation storage revenue, 3 million. That's significantly lighter. So there's a significant reduction in price per gigawatt hour. There's about a 20% reduction in price per gigawatt hour. Total gross profit, they don't, yes, I'd be interested in the breakout of the total gross profit. Total gap gross margin, 18. I had 18.9, and I think the difference is the auto gross margin. That's all the difference.
Okay. So, Cern, basically you're saying that the auto gross margin was a major miss, and the only reason it looked okay was because of the regulatory credits.
That definitely appears to help it maintain the level that we saw last quarter at 18.5%.
Yeah.
But if you back out the red credits, then the 16.4 goes down to 14.6.
There you go. That's the big thing, because I saw that some of the analysts were saying that 16% was the critical mark. If it fell below that, it's a bigger miss than they were expecting.
The other issue is the income from operations at 1.605 is subject to operating expenses that include the cost of reduction in staff. So if you back that out, then you may actually get to 62 cents.
You do. Yeah, you'd be like 55% higher.
Yeah. So it would be 600 instead of adjusted EBITDA 3.674. It depends on what the The non-gap would rise to 20. Do they say how much the it'll add for 550? So it'll go to 23.62, which would be over 65 cents. Not that I think anybody's going to run past that.
Jeff, you'll be interested to know that the auto ASP, 42,723, and that's $771 lower than last quarter. That the COGS per vehicle actually increased by $80 from 36,721 to 36,802.
So not only, yeah, and that's the Cybertruck.
Cybertruck coming in. I wish I could see a 3Y view only.
Yeah, yeah. Yeah, I think it's largely the Cybertruck, one would think. Although I don't know if the volume of the Cybertruck is sufficient. That's an interesting question. The Cybertruck sales price certainly didn't impact the average selling price.
True.
This is what AJ is saying. He said that the main driver of the Tesla's miss was a giant one-off item of $622 million for restructuring charges. We have to wait for the 10Q, but this will be mostly this 2Q head count reduction. Without this item, earnings per share would be 58%. Yeah, so
I think we just said that.
but the stock is falling because they think that the earnings per share is a complete mess.
No, I think the stock is falling because it's a miss on the top line as well as the bottom line. I think there's no doubt there's a miss on the top line.
Top line, I thought it was record revenue. Am I missing something?
Yeah, but the actual revenue for vehicles have fallen. The average selling price has fallen, and the energy top line didn't meet expectation, and the automotive top line didn't meet expectation. So I think the top line is lower than expected, and I think the bottom line is lower than expected. And if you add back in the adjustment, then perhaps you do. But
I think we're misreading the auto gross margins. I mean, ex-reg credits, it should be 16.5%. Gary, I think, corroborated that, and that was Wall Street was at 16.2. So gross margins were slightly ahead. And then again, if you use adjusted EPS, which you back out the charge for the restructuring, then it was a beat. It was 66 cents EPS versus Wall Street 62 cents. So it all depends if you put that in or out. Basically, it's a 14-cent delta.
yeah, I'm not sure what Wall Street's expectations included or excluded.
But he has gross margins ex reg credits at 16.5 ahead of Wall Street consensus of 16.2.
I'm not sure how he's calculating that, Jeff. I arrive at a different number.
Yeah, that's what I'm looking at too.
Let's take a look at the training compute here. Tesla's AI training H100 equivalent GPUs. So now, wait, this is just December 2024. They didn't show Q1 or Q2.
There's something wrong with that because it's got dotted line planned future capacity. Yeah, that's
I'm sorry.
right. Yeah,
I'm
that's
sorry.
right.
I made a mistake. Here we go. March 2024, June 2024. So we're right here. And then they put the dotted line. Okay.
Yeah, big step coming in September and in December. I wonder if Elon will be there plugging in cables.
The SG&A expense fell about 7% from one quarter to the other.
Is that with the back out of the one-time charges?
Yeah, that's just the ongoing SG&A.
Yeah. What was the ongoing SG&A?
1.277 billion,
Ah.
down from 1.374.
That's not as much as I thought it would go down.
So it was down about 100, just a little bit less than 100 million. So it's about 400 million run rate.
Not a great trade-off. It'd take a year and a half to recover that loss. I would have hoped better than that.
Should we take a look at what other people are saying? So I've got here, I don't know if you guys can see this. Doesn't look very good here. So you got Ray saying Tesla reported revenue of 25.5 billion for the 3 months ended June, compared to a 24.93 a year earlier. Analysts on average had estimated 24.7. So that's according to LCG data. So that's good, the revenue. And then Roland talked about the energy numbers, big jump in revenue and gross profit. Gross profit remained at its high, 24.6% from last quarter. The gross profit is the red, so that's looking good. You got, we have this other one from Sam Cora said, the great EV slowdown that caused a bunch of traditional automakers to push out EV plans. Focusing quarter makes you miss the big picture. So the growth is still going up. So where's the slowdown? That's it right there.
Well, if you look at the world ex-China,
Yeah,
it's only marginally increasing at this point.
correct. Okay, that's a good point. Then you've got Alex saying non-automotive gross profit almost doubled.
Yeah, I think one thing I'll say here, Herbert, how's it going, everyone? Is I was surprised that they didn't lead off with a new date for the Robotaxi event. I'm not sure if you guys have already chatted about this, but there is no date for that set, and I would have thought that would have been the first line in the report. So I think non-GAAP EPS coming in 10 cents below or whatever it might be. To me, it's like great. We should dissect it. It's a talking point, but when there's something as close as Robotaxi unveil happening with potentially, the first revenues coming in not too long from now, and the 12.5, I would have thought that would have been more of a front burner thing that they highlight in the report.
Right.
Not sure if you guys have seen anything else on it.
Yeah, that's a good
I think
point.
you're right.
That was one of the top questions that's being asked. Do you think that they'll just save that for a commentary as opposed to on the report, or would you expect it to be on the report?
Yeah, I'm just going back to the Giga Austin unveil when everyone kind of suspected it to be Austin, and then I think the first line in the report was, we're officially started our build in Austin, and it was the first thing that Elon said in the call as well. And so there was some speculation that was 12.5 just released because of earnings, and for them to have that as the main talking point. So I kind of thought, okay, maybe the push of 12.5 last night before earnings was a calculated one. But I suppose not. I mean, it could stand corrected on that still.
Yeah.
But yeah, look, overall, I think Tesla's business is, very, and I bet you today we're going to hear Elon talk about interest rates and how they're going to be coming down, and that'll help. They do talk about speculation of advertising and educating consumers in the report a little bit. I wish they would talk a little bit about more of the efforts that they would, because not everyone's going to read the earnings report. Only the most diehard Tesla fans are going to read this report with educating people on. So, maybe more of a plan of action on marketing and advertising there as well.
Yeah, I just they do have a line in the summary at the end of the summary. It says, though the timing of the Robotaxi deployment depends on technological advancement and regulatory approval, we are working vigorously on this opportunity given the outsized potential value. But yeah, I think he's got to answer the question on the earnings call. But I agree, it could have been. I guess maybe you don't want to put that in the deck, because what if they move it again? I think they have to address it.
Sounds like there's a regulatory holdup.
What?
Well, not for having an event.
Yeah. Why would they say regulatory up? Anyway, yeah, it's possible.
He's talking about deployment. So there was never an expectation of, an 8.8 Robotaxi deployment. There was an expectation of a product unveil and maybe a preview of the service and the app,
Yeah.
but not
the one number I got right, it's amazing. The one number I got within $8 million was services revenue.
Mhm.
I took a real flyer at services revenue at 2.6 billion. It came at 2.608 billion. I saw this increase coming, very significant increase coming. I just don't know what the gross margin on services was.
Yeah,
If we
and
look a
I
little,
think the way
go ahead.
I think the way the stocks have been reacting after hours, down about 3%. To me, I mean, I would say it's kind of sort of a nothing burger considering the volatility that we've seen in the last month almost for Tesla.
Really?
Like, I know a lot of people are saying like, oh, it's down a lot and the report sucks and this sort of stuff. But I mean, Tesla was up 5% the other day and seemingly on really no news. So, what we see now might not even be. It might get bought up in the morning. If I were to see a closer to 8, 9, 10% move up or down, I would consider that more of a,
What is it now? Can you take a look at the real time?
Yeah, it's
2.3%.
2.3%. Yeah.
Really? So it already popped back up again because it fell all the way down to 12% down. So initial reaction
and that's
was
typical,
bad.
right? Like when the earnings report will drop, algos will trade it up or down relatively more than it needs to. And I think when Elon starts to talk, the only real thing I think Elon can do now to move. Yeah. I mean, well, there's that joke of, if the more times Elon says optimist, the more stock will drop. But I'm not sure if that's applicable anymore. But I think if he talks about robotaxi revenue recognition or the event, I think that might prop it up a little bit. But my expectations are not high for anything different than what we're seeing now, really, which I think is totally fine considering the run-up that we've had in the last 40 days.
Okay. So, Brian, I want to get your thoughts. I know you can't read this, so let me read it to you, and then you tell me what you're thinking, okay? So,
All right.
we says, we continue to add to our vehicle lineup globally. We introduced the new Model 3, Model Y trims. After a sequential decline in production Q2, we expect a sequential increase in production in Q3. That's great news. In the US, they had the refresh Model 3. They introduced new models. Cybertruck production has more than tripled sequentially and remains on track to achieve profitability by the end of this year. Preparation of semi-factory continues, is on track to begin production by end of 2025. And in terms of Shanghai, we increased deliveries in several markets in Q2, including South Korea. While the automotive market in China remains among the most competitive globally, we feel that our cost structure and focus on core functionality that drives value for customers, including autonomy, position us well for the long term. And then in terms of Europe, Giga Berlin began producing vehicles for right-hand drive markets, delivered its first units to UK. We also began delivering vehicles to Qatar, Israel, Taiwan, and that's about what they've said. What's your thoughts on that?
So anybody who's been paying attention, which is all of us, of course, and most of our viewers, knew this was coming. Q3 is a good quarter. Q4 is a good quarter. Even if nothing changes, that remains the same. But we do see cost improvements. We do see demand levers being pulled. We do see new markets expanding. You got to look at someone like Toyota is in just about every market on the planet, and Tesla's in about half. So there's a lot of room to grow. It's painful to do so, but you can make it work if you are methodical about it, which is what we're seeing. Units are going to increase. We knew Cybertruck was going to continue ramping. That's not a surprise. It's nice to see that it's actually happening. If the batteries are the constraint, which is possible, we've seen some pretty interesting reports lately that would suggest that's perhaps the case. We've got that LG factory coming online in August, which will be making 4680s. It is my assumption that those would be going out to Texas for the, of course, Cybertruck, and perhaps even for the Model Y again. The Model Y could go back to using 4680. That would free up the 2170s out of Nevada, which would then be available for the semi-launch. In a year-ish, that factory is going to go up awfully quick, and we're going to see that because it is not as bespoke as an automobile factory. You can put it in another building or a generic building because it doesn't have to have the sort of complexity you'd see with automobiles. The people who are saying that the cars are stale, that the models are too old, they sound like Leonardo DiCaprio to me. These are young models. These are fresh models. The 3 refresh is a big refresh. People saying, "Oh no, it's just they just changed the nose." No, it's it's 50% new parts. We're going to see the same thing with the Model Y, end of year, beginning of next year, and it's going to be pretty huge. And the S and X, while not as refreshing as I'd have hoped, are new vehicles. And the demand, it appears, is such that they can increase the price on those, because the people who want a Cybertruck are just going to buy a Cybertruck. People who don't want a Cybertruck don't mind paying an extra couple thousand. So I think all of that's exciting, even before we get to the prospect of the intermediate compact based on the 3 or Y.
Nice. Thank you, Brian.
So, Herbert, I have a very important piece that I found.
Yes.
Battery powertrain and manufacturing. And I'll skip the first part. He said, in July, we entered validation of vehicle testing for our first prototype Cybertruck, page 8, produced with in-house dry cathode 4680 cells, a major cost reduction milestone once ramped.
Mm.
So that's a pretty important piece of information. I know we'd had sort of an indication of that, but this is a formal piece of information. So vehicle testing with the Cybertruck in-house dry cathode 4680 cells, pretty important.
I mean, Jeff, you must be happy because all over the place they're talking about cost reductions everywhere.
Yeah. Again, when you look at these quarters kind of, and you zoom out, when you reduce, production the way they did in Q2 to clear inventory, you're going to have utilization problems. So you're not going to be able to make some big gigafactory and supplier push to reduce COGS again. But yeah, they're what they're doing throughout the deck, you see, these are called event-driven actions. So once they're tested, completed, they just roll it into production. And whether your production's at 300K or 500K, you're going to take a net reduction in COGS for those items. But as Brian said, it's really, if you look at the second half, Q3 and Q4, and they've guided to a sequential increase in production, then they're going to start, now they're going to start getting the wind at their back as it relates to COGS. So we'll see what the real number is. But, until they get like to a stable vehicle lineup, it's going to be, it's going to be a bit lumpy, as they start preparing ramp for these newer vehicles, you're going to start building up inventory for that. And those are going to be, a little bit higher cost in the beginning. But the output of those new vehicles in the first half, they're going to be lower COGS to build when they get their peak rate, and they're going to pre-ramp the modules going into the unbox process, which they say in the deck, is still on track for the new platform vehicle. And then that's going to take the new platform vehicle and allow it to get to its gross margin target faster. So I think there's a lot of good news ahead as it relates to that, but they got to get production. The key, for stabilizing gross margins is they got to get production up. Their event-driven COGS activities are continuing to produce results. That's why they had, they're basically in line on gross margin X reg credits. Again, unless we did the math wrong, but.
And I wanted to add to that, what Jeff is saying is absolutely right. They are going to take another step towards unbox. Every vehicle they've made has been a step towards this ultimate goal, it appears. And this is, they'd be crazy to not take another step or two. I don't think they're going to go as far as I'd like them to, because I think that would incur delays. And I think what they need to do is just get more units out the door. But that will result in cost reductions. And every bit of that they can do gives them a huge competitive advantage over, frankly, everyone else. I saw a comment the other day. Someone said, well, what GM should have done is just made a car like the Model 3, but cheaper and better than Tesla. Well, I mean, yeah, but they can't. That's the whole point. They don't have any of the systems in place. They don't have any of the processes and procedures. It's not something that they're capable of doing.
Okay. So we will be doing the live stream. We'll be streaming that at 2:30 Pacific time, which is about 50 minutes from now. We'll go through the top questions that Tesla is going to answer at the event that came from the retail. We've got the 10 top questions there. And also just take a quick look here at the FSD miles. I'm pretty happy with this. This is the red is the FSE version 12 miles, and we're now at the 1.6 billion miles driven. And March, it was at the 1 billion. So it almost like in March, April, May, June, July. So in 4 months, it's almost, basically equal to where we were previously, So are you guys happy with the miles driven there? Like that, at least it looks like it's going up, straight up,
It looks like it's doubled in the last 6 months.
I'm
But
definitely
they-
happy with it. But
Yeah, they've not
I don't-
shared the take rate though. They've not shared that. Were you guys expecting that the take rate, FSC take rate, would have been shared today?
It can't be very high because there doesn't seem to be a boost from FSD at all. I don't know. I mean, do they just simply take the portion of the monthly installments as a percentage of revenue? I don't know how they handle it. They've not given us any information.
I think if
Yeah.
it was dramatic and high, they would have shared it, and maybe we'll hear something on the call. But like Larry was saying, if it doesn't make a blip in the numbers, then maybe it's not as exciting as we hoped.
And Gary updated his gross margins ex reg credits to 14.6. So that's what you were saying earlier, CERN, closer to that.
Which is a major miss, right? Instead of 16%.
Yeah, and I'm assuming they're going to speak to the lower production as driving that, but they should take that question.
Okay, let's do a quick summary. What do you guys? What did you find, and what was your analysis? So for the people who just joined, Søren, do you want to give the update on what you overall see what happened here?
Well, I think overall, my takeaway is that there still appears to be some challenges, weakness, questions on the auto side of the business. No doubt there are good explanations for everything that we're seeing. I know everybody doesn't like regulatory credits, but $890 million in one quarter is pretty sweet. That's basically 100% margin business. And I look at that as the competition funding Tesla's expansion. And since inception of the business, I've calculated that about almost $9 billion in reg credits have been received. So ignore that if you want, but that one-time, hit keeps coming and growing. So, we can fret all we want about one quarter and its margin impact, 14.6% if you exclude the reg credits. And again, I'm hoping to learn more, as Jeff said, about what comprised and what impacted that number. The energy side of the business, revenue went from 1.6 billion last quarter to just over 3 billion this quarter. So that's fantastic progress. Now, I think you could argue that number could have even been higher. And I think now we're interested in seeing the 10Q and what the deferred revenue balance is, as well as the unsatisfied performance obligations that Larry has talked about and looked at. So we've got some things to learn, I think, about energy, but that certainly is promising. Margins on energy were the same as they were last quarter at 24.6%. That's fantastic. The services side of the business, margins are now 6.4%. This is gross margins versus 3.5% last quarter. So a nice uptick in that business. The restructuring charge, 622 million. That's a bigger number than I think everybody was expecting. And so I'm curious to learn a little bit more about what comprised that, because I think expectations, or they'd guided, I think, to around 350 million, if I'm not mistaken. So this is quite a bit higher than what they had guided to. So those for me are some of the key takeaways.
Thank you, Søren. If you're in the audience, please, you can see that I've got the best of the best here, the financial analysis, strategic. You got Søren Basher. Follow him on X at Søren Basher. You got Jeff Lutz, the Jeff Lutz, and you got Larry at Tesla Larry. And of course, follow Brian at Futuraza on his channel as well. Jeff, do you want to give your summary of everything you've seen so far?
Yeah, I mean, it looks like obviously the lower production in Q2 will weigh on gross margins. Let's wait to hear what they say. But that's, it looks like they're guiding to sequentially higher volumes, which is good news. The improvement on energy, they said it could be lumpy, but in general, they're opening up new capacity in Q1 of 2025. This looks like it's on a trajectory to continue to improve. And I think there's one thing that's tripping up people I'm seeing online is that where they make the comment regarding growth being lower than the growth in 2023. They're talking about the percent growth year on year. They're not talking about total number of units. I think people are missing total number of units and then percent growth. But I think they've mentioned that in the Q1 earnings call that the growth would be lower this year than the prior year. But the big thing here, I think I'd like to really call out is their approach and how for in the first half of 2025. So this isn't far away. We're talking 2 quarters of ramping these next generation vehicles, which are going to be lowering COGS, which will allow them to lower ASPs, which will allow them to drive volume. It looks like it's going to take their capacity here from the what they're reporting 2.2 to closer to 3 million. And they're going to do it in a very capital efficient manner. So you've seen the announcements from GM, you've seen the announcements from Ford of what's called deprecating capacity. They're actually they're not adding new capacity. In some cases, they're removing capacity. And Tesla is actually going to add capacity, but they're going to do it in a much more capital efficient manner than just doing a brand new vehicle platform. So what it means, I think, is basically they're going to be able to get to their gross margin targets faster. They're going to burn less capital to get there, and they should be meaningfully growing. Looks like they said a 50% growth in volume next year. So this is not, I mean, we're in the window, the kind of the financial forecasting planning window, analysts looking ahead, they're going to grow, volumes that much, and they're going to do it in a capital efficient manner. I would hope that Tesla kind of talks a little bit more about that on the call. And that should be the key takeaway is like, we're at peak interest rates right now, difficult environment. Look what's going on with others. But our plan for the following year is going to be anchored by these lower cost vehicles that will get the gross margin faster on and increase our volumes meaningfully.
I'll go next if that's all right. Actually, just because I need to get back on the road because I'm done charging and I'm on my way to the X-Takeover in San Luis Obispo. Join us, won't you? I agree with everything Jeff said. We know that Dojo is the future. We know Optimus is the future. We know the Robo Taxi network is the future. But those are not coming in the next 6 months. Probably not the next 12 months. Maybe not for a couple of years. You've got to build out the capacity. You've got to ramp all those things. We're not expecting thousands of Optimi until 26. So it's going to be a little while. And in the meantime, we still need to sell cars because people are still buying cars. And that intermediate compact is the key. We've seen Tesla ramp cars quickly when they know what the car is. When the Model Y was announced, 365 days later, it was out. 1 year. And of course, everyone said that's impossible. It's going to take forever. No, without fanfare, it arrived early. So then you've got, the Model 3 in Shanghai. When they said they were going to build that, it took a year. They already had the Model Y in Fremont. When they added the Model Y in Shanghai, it took a year. So when you're working with an established product that's maybe slightly different, and all of those were slightly different. They had different components. They had different batteries. Some of them had castings. The other ones didn't. They were not identical carbon copies. So even with some small changes, they can get it done quick. And I think that's what we may be looking forward to seeing is within the same factories, on the same lines, a new car for a slightly different segment of the market and more diversification of products, while at the same time pulling all the demand levers, the colors, the interest rates, the FSD transfer. It is a recipe, in my opinion, for success.
Thank you so much, Brian. I appreciate you stopping by. I know you're traveling. This was a big deal for you to do this. I appreciate it. Have fun. Enjoy yourself. Come back anytime if you stop again. Thanks. Okay, Larry?
Well, not a lot to add to what everybody has said. I would like to have seen better at the auto revenue, but I think what you have said about where we're going as opposed to where we've been is very important. I know that it's a very small number, but I'm pretty encouraged by the service revenue. We're reaching a margin that is close to historic, and it's going in the right direction. I think a lot of that has to do with the supercharging network. Some of it has to do with improved service centers and body shops. So that's a good thing. But at the end of the day, everything turns on the new products that are on their way. We have a capacity to manufacture, upward of 3 million cars, and we're way, way below that number. So hopefully that explains why the new models are going to be built in the existing factories. So we're going to soak up that additional capacity so that when Mexico actually comes online, we have a potential increase. So I think it's a mixed bag, and I really look to Elon to help understand the direction of the company at the meeting.
Okay. I mean, so the numbers did not look good. The key one was the 14%, but they said that the growth is, back up to Q2, back up again in China. The growth for EVs and back up again. You've got progress in AI. You got progress in FSD. Was there anything else? Like Cybertruck looks like that it's tripled and remains on track to achieve profitability by end of year. I guess one of the negatives would be that the more affordable models they're now saying second half of next year. I mean, maybe there's a difference between what they say on the document here versus what they'll say on the call.
It says first half production.
I meant first half of next year, as opposed to, last quarter of this year, which is some people are thinking that could.
Well, that was a maybe possible, but stretch. Yeah, it was honestly first half of the following year.
Yeah. But I mean, I guess the real number right now, the stock fell because of the real numbers today. But was there anything negative about the future? The only thing I would say too is I did not see real statements that they used to say. They kind of been very just neutral about the future too.
Well, they said 50% growth in
Can you read that
production
again? Because when I read that, it wasn't for next year. That was like they're saying our capacity can be a 50% growth again. That's what they said.
No, if you read the capacity right now, you'll see. Well, it's a general number, but it's pretty high. They talk about the capacity going to 3 million, but if you read the actual document on page,
see, it's expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over the 2023 production before we invest in new manufacturing lines. So that didn't
invest in new manufacturing lines.
So that didn't tell me anything new.
Those last three paragraphs there on page 10.
What do you mean?
Okay, do you tell me, Jeff? What is it new about that?
What do you mean? Well, new. I mean, it's a 50% growth. It says 50% growth over 2023 production. So whether they're mixing capacity or not, Tesla tries to keep their capacity within 20% of their production normally. So there's going to be a rather significant growth. What they're projecting is significant growth in production next year.
Well, they didn't say next year. That's my point. They just said generically, if we do this, then eventually, at some point it will get this level.
No, the header for the conversations in the paragraph above, they talk about the new vehicles for production in the first half of 2025. They talk about, it's basically going to allow them to be more capital efficient. This approach will result in achieving less cost reduction, but will allow them to prudently grow their volume. So basically, it's me less capital investment to grow their volume than trying to grow their volume. The prior plan, which to me this is a better plan. The prior plan was second half of 2025, get ready to produce the next generation platform, full unbox model, everything. That's new CapEx. That's new Gigafactory CapEx. That's new module CapEx. Remember the modules, the electric motors, everything else that's going in. So instead of new CapEx for everything, they're going to be able to basically to extrapolate and use the CapEx from the 3 and Y Gigafactory production, probably with some minor modifications. And the new CapEx is just going to be the modules. Anyway, long story short, they plan to increase production significantly next year, and Tesla doesn't just jack up their production and not for no reason. They have a plan to do production and sell it.
Okay, if it is true that you're talking about next year, that's huge. That's huge. But we're back to
that's what it says.
Growth statement.
Next year is 2025.
I didn't read next year. That's all I'm saying.
Well, we'll go back to it.
Okay. It doesn't say next year. That's all. That's what I'm saying.
Plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025.
Right. Yes.
Okay, so it's talking about the approach to building those vehicles. And then the second paragraph is connecting that approach for building vehicles in that manner will allow them to grow their volumes.
Okay.
And 50% growth in over 2023 production before investing in new manufacturing lines.
I wonder why they didn't say 50% growth over 2024 production. Because they don't know it yet. It's not done yet.
They're similar, but they're similar. They're going to be similar.
Yeah, they're about the same.
Those 3 paragraphs are the same as the disclosure in the Q1 report, with the exception of the first sentence. In the Q1 report, the first sentence says this: we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. Okay. Now they're saying the first half.
What?
Everything else is exactly the same.
Elon clearly said when he was talking about it, he said first half of 2025. But on the write-up, it said second half of 2025?
Word for word, it says, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half.
Yeah.
2025.
Oh, so it's the same thing. They're just saying that it's going to be done in first half. That's the same statement, basically.
Yeah, they're maybe being a little bit more clear about that now.
Okay, I feel better if that's the case, Jeff. I mean, 50% growth over 2023. So you're saying instead of 2 million, they're expecting to sell 33 million.
Well,
50% growth.
Well, again, these auto companies like Tesla's, the auto portion of this company, they like to intermix the term capacity, production, and deliveries. They're 3 different things. Just because you install the capacity, this is the GM commitment from next year. GM says we're not going to have 1 million units of capacity. But if you don't have 1 million units of capacity, you're not going to do 1 million units of production. You're going to do some number that's less. Yeah. So in this case, Tesla is talking about installed capacity. By the way, when Tesla makes a move in Shanghai, like the move they did going from 42 seconds to 30 seconds, they net increase their capacity, at least on that product line, by 28%. Wow. So these numbers are subject to change and movement, and we've seen Tesla go usually much higher than the posted numbers here. But they have to post some number of installed capacity, and basically what they're saying is we built around 1.8, some 1.8 and change in 2023. They'll probably do some number around that in 2024. Because their prior guidance was they would exceed the volume of 2023 and 2024 in production. We'll see if they maintain that. And now what they're saying is it should be 50% growth. So 2.7 production and 3 million capacity makes sense to me.
All right, I want to look at this profitability because they actually tell you, pretty well what impacted the profitability. And when I look at this, I guess obviously it sounds bad at first, but when you stop and think about it, it doesn't look bad. I mean, the reason why operating income fell was because of reduced ASPs. Okay, that's fine. Restructuring charges. That's that's a good news, not a bad news. But of course, it's going to look bad at this quarter. Increase in operating expenses, largely driven by AI expenses project. That's good news. Decline in sexy vehicle deliveries. That is a concern that people have right now. Higher regulatory. Now these are the positives of what makes it go up, and of course we're going to take away the the regulatory credit, and then we already know about the energy, lower cost per vehicle, lower cost production ramp. What do you guys think about this list?
Well, we expected the decline in sexy vehicle deliveries. I think the decline was further than we anticipated. I think that's the underlying problem. Not so much the decline in vehicle deliveries, but the decline in average selling price. That's actually not what they call out here, which is quite a big issue.
So you're saying despite the reduction in ASP, you still had a higher reduction in vehicle deliveries than expected?
Yeah, so you had the combination of both, and larger than we expected. But, I think there's some glimmers of good news, and the most important issue is the refresh, the new model refresh. And I think the fact that we're going to get deliveries in the first half of next year is the key here. And the question is how soon, and some color on that. If we get really good color on the new vehicles and some date for because 8.8 was announced in the last quarterly meeting. If we get the same update on that, whether it's the first month of next year, whether it's the last month of this year, whatever we get, I think will be very important, and how Elon positions it.
Okay, let's take a look at the bingo card that CERN put together. We're going to take a look at the questions that the retail shareholders have asked for. So we were back to this again. After you saw the earnings report, the actual financials, CERN, is there anything here that you want to remove, change, or expected more likely to happen? More than 1.8 million vehicles?
I don't know that anything in the report changes anything here. I mean, I think some of these are a wish list item, right? Taking orders for Optimus, for example, would be a wish list item. I don't really.
Well, he already answered that, though. He just answered it 2 days ago.
Well, that they'll start selling to external customers, but not that they're taking orders.
Okay.
When does the order book open?
Mm-hmm. Solve the 4680 challenges. They seem to have said that in the financials.
Yeah.
Mm-hmm. Maybe the more than 1.8 million vehicles. They kind of alluded that the growth is back to normal.
Yeah. Now, just to go back, the restructuring charges plus the foreign exchange hit, I think it's about a $900 million negative impact. Right. So that's a pretty big number.
Yeah, and it doesn't seem to have brought with it concomitant value. I mean, it seems to reduce the ongoing operating costs, but not by a heck of a lot. Not. It's going to take them 1.5 years to get that money back.
Yeah.
Larry, are you pounding the table? Are you that upset?
Oh yeah. Sorry. I'm not pounding the table, but I am moving my mouse.
I wouldn't underestimate too, like part of this gap in gross margins is just honestly, you have to read between the lines what they're saying. If the Cybertruck isn't going to get to profitability by the end of the year, that means it's still at some net burn rate at this point in time. You have to put that on a number. Well, hang on. Let me finish. Let me finish my statement. Jeez, Herbert.
I thought it was Jordan Peterson for a second.
Gosh, yeah. I was going to say something else, but
no respect, Jeff.
No respect at all. Anyway, sorry, Herbert. You got to put it on a number. Are they burning 10K per vehicle, 30K per vehicle? And as that production ramps up, so anyway, that at some point that'll meet in the middle, but that could be $200 million right there. Mm-hmm. It's not insignificant anymore. It's not. We always think of Cybertruck as 1,000 or 2,000 vehicles, but if it's 11,000, 10,000 vehicles, you're talking a big number.
I was asking, what did you expect? Because when I talked to you at the beginning of this year, you were not expecting profitability out of, till the end of that this year.
I wasn't expecting it. I'm just saying, I'm honestly just commenting on the contribution to a gross margin drag. If you have low production of S3 XY, and then you now you have to start, because it's not 3,000 or 5,000 units anymore, it's 11,000 units, and then it's going to be probably 20,000 units. Who knows what it'll be, going forward in the next quarter. All I'm saying is that's a pretty big net drag until that gets to its point of break even. It's a pretty big net drag. So they need that dry electrode. They need these other things to come through, and that's why they've elongated the foundation series through the end of the year. That was one of the reasons. So it's not like foundation series is like it's not buoying the whole thing. It's a net drag. It's probably more than we think. It could be a 1 or 2%
even the foundation
gross margin
series is not profitable.
Yes.
No.
It absolutely is not profitable.
How can you not be profitable at 120
Well, it says so
because
in
of
their
the
report.
cost to set up?
It says in the
says so
report,
in the-
Herbert.
Yeah.
See, if you weren't cutting me off, you'd listen to what I said in the first sentence. You got to read. You have to read the
Between the lines.
report.
You said between the lines.
Read between the lines. It says get the profitability by the end of the year, which means it's not profitable now with foundation series.
Okay. I guess I just have to connect the two together because that is expensive.
And all I'm saying is it could be 1 or 2 points of gross margin, just that alone. You just got to do the math.
Again, but don't you need scale in order to get to profitability?
Yes.
So there's like this little bit of this situation we're in.
It depends on what the problems are. If the problems are like we have a fundamental yield problem, we need to go change something in design or manufacturing, you don't need volume. But it depends on what the issues are from a contribution perspective. But in general, yes, you need to get the scale, but they may have some surprises they're still dealing with that they didn't anticipate, and that's dragging, it's dragging gross margins down. All I'm saying is this is not an S3 XY business anymore. This is plus Cybertruck, and I bet if you pulled Cybertruck out of it, you'd probably be closer to the 16-17% gross margin. I mean, you just have to do the math.
That's fantastic, Jeff. I don't know if anybody else has said that, and it makes sense. If you think it's about 1 to 2%, that's huge. That's a huge hit on the gross margin.
I mean, are they losing 20,000 per vehicle, 30,000 per vehicle times 10,000? You just do the math.
Wow.
And then as they ramp up production, that potentially becomes worse before it gets better.
Yes, there'll be a point of worse before it gets better.
Hard for me to believe that they've losing money on a $120,000 vehicle.
You don't see that in the other models. You didn't see that in the Y because you didn't do this kind of math. You didn't have the means to do that kind of math. But they certainly lost quite a lot of money in the first months of the Model 3 and the first months of the Model Y. So there's no reason for them not to do that. And they lost money in the refresh X and Y, X and S and X. I don't know if you remember those months, but there was a blip in the margins.
Why is this the very first question that's been voted up to be asked? What is the status on the Roadster? 2.2 million shares represented. I was joking that maybe there's one guy that has 1 million shares and goes, "Where's my Roadster?"
Larry did that.
Larry.
I don't have a Roadster. I haven't got any Roadster on order. I don't have a Roadster ordered. I'm not buying a Roadster.
I don't know why this is number one, but okay, it's number one. Number two is when exactly is the Robotaxi event, if not 8/8, 1.9 million shares represented. Will they answer that today? I think they have to. If they don't, it's going to be bad news.
Yeah, I think they will.
You guys want to put bets? 10-10?
We'll have comments on that. Yeah.
11-9? What do you guys think? November or December?
January.
If they announced January, don't you think that everybody would freak out and that would be bad news?
Depends on how they position it.
January, Larry?
I think so.
Bloomberg said October from their sources. Okay. You have sources?
I have an instinct.
Okay. Well, Jeff, what's your instinct telling you?
Oh, probably November.
Okay,
Worst
CERN?
case, December.
I'm sticking with October.
Okay, there you go. I'm a betting man. I still stay with October, but okay. When exactly is a robotaxi event? They need to answer that. Okay. When do you expect the first robotaxi ride? I'm assuming they mean the first commercial or first pilot of an actual paying customer, not at the event, right? I don't know if this is appropriate to be asked at the earnings call rather than waiting for the January event.
I don't think they'll answer this question directly.
Cybertruck's an iconic product that wows everyone who sees it. Do you have plans to expand the cyber vehicle lineup to cyber SUV or a cyber van? I mean, they're calling the robotaxi a cyber cab. Okay, another question. Do you think it's a good question?
He never talks about product at these events, and I think he'll decline.
You'll think he'll decline? What do you guys think, Jeff? Can't hear.
Sorry, what's the question?
Cyber vehicle lineup, the cyber SUV or cyber van. Do you think that he'll?
I don't think he's going to do a product announcement at this event. I was surprised he talked about the new affordable vehicles at the Q1 event. So it would be appropriate for him to update the status of those. Like is something meaningfully changed or not?
Yeah,
but I mean, they addressed it in the deck too.
Yeah. Other than cyber cab, they're not going to say anything. They're not going to give you names, things like that. They can change it at the last minute if they wanted to. Current status of 4680 battery cell production. How's the ramp up progressing? I thought they answered that on the earnings call last time.
They should. It is an absolute waste of a question.
You think that
Unless
they've already
get
answered it?
better color on it.
Mm-hmm.
Yeah, you have to ask questions in a definitive way that ties them to a prior committed plan and their performance to that plan on volume, on cost, and really ask it in a more definitive manner. This like, how's it going? You can just say, well, it's tough. Like, making batteries is tough, but we doubled production from the prior quarter, and we're going to add more production this quarter. Then you really don't know anything else. You don't know much more.
These are terrible questions, I think. Just a waste of space.
Okay, before we continue, I just want to double check because we are going to stream. We'll stream when they do it. We'll do it on this channel. So I'm just going to show folks this is how we're going to do this. So does that appear nicely? Right. And I can even do full screen, of course.
Herbert, what are the surprises that Elon could mention on the call that could either dramatically move its
move
it
it's
up
the
or
one
down?
that you've been saying. It's the one you've been saying all along. It's going to be.
I'm just putting a question out for the panel.
Okay, good question. I think it's. What do you guys think? I think it's going to be what you've been saying, which is a partnership announcement.
I doubt there'll be a partnership announcement in this meeting. I mean, it's possible, but it would be very exciting, but I doubt it.
You're referring to an FSD partnership.
Yeah, it's unlikely because it's not the event that they would do it. They would do it at the Robotaxi event.
Or they would just schedule a meeting like separately and get the company on a space or something. No, I think there could be some surprise. So first off, they could say like that partner we announced that we're, it's maybe the deal's progressed to some phase, or they could add another, they could say, two other, tier one OEMs we're now in negotiation with. So now all of a sudden, now you have a stable of OEMs you're in negotiation with. That I think that could be meaningful, but I don't think they're going to announce a particular deal on this call. The other thing they could say is something along the lines of like, are they seeing something relating to, either with 12.6 or something greater than 12.6, where they think they've achieved full autonomy or something along the lines of, they're looking at, they're looking at product and testing, they're testing a couple of months ahead of what we see. So I don't know if there's something meaningful they could say about that. But right now people are, they're kind of like, oh, let me, proof is in the pudding. Let me see it. And then could they be more bullish on, earnings and kind of, interest rates coming down globally? What else? Yeah.
I mean, the only thing would be it has to be a surprise, right? That's the problem. It has to be a surprise.
Yeah, I just wouldn't underestimate. Why does Tesla think that their production's going to grow 50% next year? They don't toss those numbers around lightly. They're pretty conservative. They're conservative with their supply base. They don't like this because anyway. So there's something.
I think, Jeff, I think that it's going to be a very early release of the Model 2 or whatever we want to call it. I know people are negative about that, but I think that's the focus. I think producing that low-cost vehicle in volume early and building volume during the year, I think that's what the focus is going to be.
Wait, okay, so Larry, you're confusing me because all they've talked about so far is the more affordable vehicles built on the same production line.
That's what
those two. Okay, well then I don't know if you should call it Model 2. That's not. First of all, he doesn't use that name.
Model 2.5. I don't. Whatever you want to call it, fair enough. Model 2.8.
More affordable vehicles. Yeah.
Yeah. So I think that, and it's not going to be called the Model 3. It's not going to be called, and maybe you're right, it won't be called the Model 2, maybe whatever it's going to be called. I think that's the number, and it doesn't replace the Model 3, but it certainly is in the model lineup. And so when you say a more affordable vehicle, I definitely think it's going to be a different model.
I think that, to me, that would be the best with all information. Like, it's almost like after reading the delivery deck or after reading this deck, what about next year gives you confidence that you're going to grow production?
That's the question.
50%.
Jeff, I nominate you to ask the question.
Well,
that is the question, guys.
Are you expecting him to say something like, well, the two affordable models that we're creating is going to be this big TAM, both of them by next year? That's what you're hoping he will
not big TAM. This we're going to deliver 1 million vehicles or 1.5 million vehicles. He's going to have to deliver 1.5 million vehicles because it's going to take away Model 3 and Model Y volume. That's for sure.
Where's this production capacity increase coming from? Is it mostly China?
No, they've got. I calculated earlier. They've got between 500 and 800,000 car capacity in China, and they've got about 1 million car capacity. 500,000 car capacity in Texas.
As far as increase.
Yeah. So they have a 3 million car capacity. There's no capacity left in Fremont. I don't think. The capacity is in this vast open space in Texas that they've now put a lot of equipment into. A lot of equipment. I don't know if you've been following Joe's videos, but there's a huge amount of equipment gone in there. Huge amount. And I'm not talking about the stuff that's gone into the new south end, the new building in the south. I'm talking about actual car manufacturing line equipment. So they have a new manufacturing line or an extension or an addition to the Model Y manufacturing line. And they've got, of course, all the new battery lines, but that's not as important. And then they have all this additional capacity due to due to the increased speed of the line in China. And we know that they've got very significant excess capacity in Berlin. We just don't know what they've done with that. We don't have as much intel on that as we do have in Texas. But I have to believe there's 1.5 million excess capacity, or 1.5 million capacity that has been put into the lines up to now. Jeff, what do you think?
Yeah, no, I mean, we've seen what they've been able to do with just their existing factory footprint and improving their output and improving the click rate and time per vehicle. So yes, there's capacity going into Texas. I would say, all of it is underutilized at this point. So I think it's honestly going to come out of, some combination of Shanghai and, in Texas, probably, maybe some Berlin. It's not at its full potential. But I think going back to this question of why are you confident that you're going to increase production by basically 50%? And I think the answer we're going to hear is, number one, we're going to produce these vehicles that are going to be, meaningfully cheaper, not, $17,000 to $20,000 in COGS, but probably on the order of $27,000, $28,000 in COGS. So they can take ASPs down again. But I think the big thing is that I think they're going to project that they're going to be at full autonomy, and the vehicles that they're selling next year, you will be able to, sit in the vehicle and it will drive you, hands free anywhere. And I think why else are you adding 50%? Why else are you saying you're going to fill up 50% capacity, but you're only taking COGS down, I would say relatively, it's a big move, but it's not a tremendous move.
I'm not buying that.
That's a huge statement. Let's dive deeper into that. I want to just show you guys. So we've got, I'm just practicing with this. If I play this, I just want to make sure you guys can hear it.
Yep.
Okay. So what I will do is I'll play this. I will, when this shareholder meeting comes up, it'll just be like that, all on its own. Okay.
Just back to our FSD discussion, I did some quick calculations and maybe help me think this through. If there are 6 million cumulative vehicles deployed by Tesla in the world, if half of them are in the United States, and if those vehicles drive, let's say 13,500 miles a year, then they're doing 40 billion miles a year. We know that FSD in the last 6 months just did 800 million miles. So annualize that, 1.6 billion. So 1.6 billion over the 40 billion is 4%. Right? So either every vehicle has FSD and therefore 4% of its miles are FSD. We know that's not true. Or there's some percentage of vehicles, let's say, maybe half of their miles are being driven on FSD. Right? So we can kind of back into what a take rate might be. Is that the way to think about it?
It's a very good start. It would be interesting to compare that to Troy Tesla's FSD analysis. But I think that's an ingenious way to tackle the FSD take rate.
There's a bunch of assumptions in there that we don't have clear numbers on, but
Right.
Hey, earnings call going to start in 5 minutes.
You don't think that's a good question, FSD take rate?
Well, it would be a great question to know. It would be a great question. It'd be great information to track over time.
I just think there's too many. First off, you have to be an FSD enabled vehicle in an FSD proven country. And then you have to know what percent of miles are driven on FSD and not. And it's a difficult thing. There's so many variables here that could trip you up and move your answer, I would say, meaningfully, in one direction or another. I think you can look at it directionally and do some relative assessments. But I think if you're looking for an absolute number, really has to come from Tesla.
But we've got to find a way. It's very valuable for us to find a way. And I think there are very few vehicles that are not and we know the number of non-FSD capable vehicles. It's a small percentage. It's a small number, but we have an absolute number. I've got production by month by year throughout, for the last since the year dot. So we know that. And then the next thing we know is how many vehicles are sold in the US, how many are sold in Canada. We know when Canada FSD driving started. We know when US FSD driving started. So I think you can get pretty close. I think CERN's number would be about the most, I think his method is about the closest I've heard so far.
Okay. So let's play this. They started playing music.
And Herbert, shall we try and not have the chat on the right-hand side, or do we want the chat on?
What chat? You can't. They can't.
Good afternoon, everyone, and welcome to Tesla's second quarter 2024 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So to recap, we saw large adoption acceleration in EVs, and then a bit of a hangover as others struggle to make compelling EVs. So there have been quite a few competing electric vehicles that have entered the market, and mostly they have not done well, but they have discounted their EVs very substantially, which has made it a bit more difficult for Tesla. We don't see this as a long-term issue, but really as fairly short-term. And we still obviously firmly believe that EVs are best for customers and that the world is headed for a fully electrified transport, not just of cars, but also of aircraft and boats. Despite many challenges, the Tesla team did a great job executing, and we did achieve record quarterly revenues. Energy storage deployments reached an all-time high in Q2, leading to record profits for the energy business. And we're investing in many future projects, including AI training and inference, and a great deal of infrastructure to support future products. We won't get too much into the product roadmap here because that is reserved for product announcement events. But we are on track to deliver a more affordable model in the first half of next year. Really, by far, the biggest differentiator for Tesla is autonomy. And in addition to that, we have scale economies, and we're the most efficient electric vehicle producer in the world. So, anyway. While others are pursuing different parts of the AI robotic stack, we are pursuing all of them. This allows for better cost control, more scale, quicker time to market, and a superior product. Applying not just to autonomous vehicles, but to autonomous humanoid robots like Optimus. Regarding full self-driving and robotaxi, we've made a lot of progress with Full Self-Driving in Q2, and with version 12.5 beginning rollout, we think customers will experience a step change improvement in how well supervised Full Self-Driving works. Version 12.5 has 5 times the parameters of 12.4 and will finally merge the highway and city stacks. So the highway stack is still, at this point, is pretty old. So often the issues people encounter are on the highway, but with 12.5, we finally merged the 2 stacks. I still find that most people actually don't know how good the system is. And I would encourage anyone to understand the system better to simply try it out and let the car drive you around. One of the things we're going to be doing just to make sure people actually understand the capabilities of the car is when delivering a new car and when picking up a car for service, to just show people how to use it and just drive them around the block. Once people use it at all, they tend to continue using it. So it's very compelling, and this, I think, will be a massive demand driver. Even unsupervised Full Self-Driving will be a massive demand driver. And as we increase the miles between intervention, it will transition from supervised Full Self-Driving to unsupervised Full Self-Driving, and we can unlock massive potential in the fleet. We postponed the sort of robotaxi, or the sort of product unveil by a couple months, where it's shifted to 10/10, so the 10th of October. And this is because I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things. So moving it back a few months allowed us to improve the robotaxi, as well as add in a couple other things for the product unveil. We're also nearing completion of the south expansion of Giga Texas, which will house our largest training cluster to date. This will be an incremental 50,000 H100s plus 20,000 of our hardware 4 or AI5 Tesla AI computer. With Optimus, Optimus is already performing tasks in our factory, and we expect to have Optimus production version 1 in limited production starting early next year. This will be for Tesla consumption. It's just better for us to iron out the issues ourselves. But we expect to have several thousand Optimus robots produced and doing useful things by the end of next year in the Tesla factories. And then in 2026, ramping up production quite a bit. And at that point, we'll be providing Optimus robots to outside customers. That'll be production version 2 of Optimus. For the energy business, this is growing faster than anything else. We are really demand constrained rather than production constrained. So we're ramping up production in our US factory, as well as building the Megapack factory in China that should roughly double our output. Maybe more than double our output, maybe triple potentially. So in conclusion, we're super excited about the progress across the board. We're changing the energy system, how people move around, how people approach the economy. The undertaking is massive, but I think the future is incredibly bright. I really just can't emphasize just the importance of autonomy for the vehicle side and for Optimus. Although the numbers sound crazy, I think Tesla producing at volume with unsupervised FSD, essentially enabling the fleet to operate like a giant autonomous fleet, and it takes the valuation, I think, to some pretty crazy number. ARK Invest thinks on the order of $5 trillion. I think they're probably not wrong. And long-term Optimus, I think, achieves a valuation several times that number. I want to thank the Tesla team for strong execution and looking forward to exciting years ahead.
Great. Thank you very much, Elon. And Vaibhav has opening remarks as well.
Thanks. As Elon mentioned, the Tesla team rose to the occasion yet again and delivered on all fronts with some notable records. In addition to those records, we saw our automotive deliveries grow sequentially. I would like to thank the entire Tesla team for their efforts in delivering a great quarter. On the auto business front, affordability remains a top of mind for customers, and in response, in Q2, we offered attractive financing options to offset sustained high interest rates. These programs had an impact on revenue per unit in the quarter. These impacts will persist into Q3 as we have already launched similar programs. We're now offering extremely competitive financing rates in most parts of the world. This is the best time to buy a Tesla. I mean, if you're waiting on the sidelines, come out and get your car. We had a record quarter on regulatory credits revenues and as well. On net, our auto margins remain flat sequentially. It is important to note that the demand for regulatory credits is dependent on other OEMs' plans for the kind of vehicles they're manufacturing and selling, as well as changes in regulations. We pride ourselves to be the company with the most American-made cars and are continuing our journey to further localize our supply chain, not just in the US, but in Europe and China, as well for the respective factories. As always, our focus is on providing the most compelling products at a reasonable price. We have stepped up our efforts to provide more trims that have estimated range of more than 300 miles on a single charge. We believe this, along with the expansion of our supercharging network, is the right strategy to combat range anxiety. Since the revision of FSD pricing in North America, we've seen adoption rates increase meaningfully and expect this to be a driver of vehicle sales as the feature set improves further. Cost per vehicle declined sequentially when we remove the impact of Cybertruck. While we are experiencing material costs trending down, note that there is latency on the cost side, and such reductions would show up in the P&L when the vehicles built with these materials get delivered. Additionally, as we get into the second half of the year, it is important to note that we are still ramping Cybertruck and Model 3 and are also getting impacted by varying amounts of tariffs on both raw materials and finished goods. While our teams are working feverishly to offset these, unfortunately, it may have an impact on the cost in the near term. We previously talked about the potential of the energy business and now feel excited that the foundation that was laid over time is bearing the expected results. Energy storage deployments more than doubled, with contribution not just from Megapack, but also Powerwall, resulting in record revenues and profits for the energy business. Energy storage backlog is strong. As discussed before, deployments will fluctuate from period to period, with some quarters seeing large increases and others seeing a decline. Recognition of storage gigawatt hours is dependent on a variety of factors, including logistics timing, as we send units from a single factory to markets across the world, customer readiness, and in case of EPC projects on construction activities. Moving on to the other parts of the business, service and other gross profits also improved sequentially from the improvement in service utilization and growth in our collision repair business. The impact of our recent reorg is reflected in restructuring and other on the income statement. Just to level set, this was about $622 million of charge, which got recorded in the period. And I want people to remember that we've called it out separately on the financials. Sequentially, our operating expenses, excluding such charges, reduced despite an increase in spend for AI-related activities and higher legal and other costs. On the CapEx front, while we saw a sequential decline in Q2, We still expect the year to be over 10 billion in CapEx as we increase our spend to bring a 50K GPU cluster online. This new cluster will immensely increase our capabilities to scale FSD and other AI initiatives. We reverted to positive free cash flow of 1.3 billion in Q2. This was despite restructuring payments being made in the quarter, and we ended the quarter with over 30 billion of cash and investments. Once again, we've begun the journey towards the next phase for the company, with the building blocks being placed. It will take some time, but will be a rewarding experience for everyone involved. Once again, I would like to thank the entire Tesla team for their efforts.
Great. Thank you very much, Vaibhav. Now let's go to investor questions. The first question is, what is the status on the Roadster?
With respect to the Roadster, we've completed most of the engineering, and I think there's still some upgrades we want to make to it, but we expect to be in production with Roadster next year.
Great.
It'll be something special, like a Hall of Famer, I think.
Fantastic. The next question is about timing of Robotaxi event, which we've already covered. So we'll go to the next question. When do you expect the first Robotaxi ride?
I guess that's really just a question of when do I expect the first, when can we do unsupervised full self-driving? It's difficult, obviously. My predictions on this have been overly optimistic in the past. So, I mean, based on the current trend, it seems as though we should get miles between interventions to be high enough that it should be far enough in excess of humans that you could do unsupervised possibly by the end of this year. I would be shocked if we cannot do it next year. So next year seems highly probable to me based on points simply plus the points of the curve of miles between intervention. That trend exceeds humans for sure next year. So, yeah.
Thank you very much. Our third question is, the Cybertruck is an iconic product that wows everyone who sees it. Do you have plans to expand the cyber vehicle lineup to a cyber SUV or cyber van?
I think we want to limit product announcements to when we have a specific product announcement event rather than earnings calls.
Great, thank you. Our next question is, what is the current status of 4680 battery cell production, and how is the ramp up progressing?
Yeah. 4680 production ramped strongly in Q2, delivering 51% more cells than Q1, while reducing COGS significantly. We currently produce more than 1,400 Cybertrucks of 4680 cells per week, and we'll continue to ramp output as we drive costs down further towards the cost parity target we set for the end of the year. We've built our first validation Cybertruck with dry cathode process made on our mass production equipment, which is a huge technical milestone, and we're super proud of that. We're on track for production launch with the dry cathode in Q4, and this will enable cell costs to be significantly below available alternatives, which was the original goal of the 4680 program.
Great.
Thank you very much. The next question is, any update on Dojo?
Yeah, so Dojo, I should preface this by saying I'm incredibly impressed by NVIDIA's execution and the capability of their hardware. And what we are seeing is that the demand for NVIDIA hardware is so high that it's often difficult to get the GPUs. And there just seems this, I guess I'm quite concerned about actually being able to get state-of-the-art NVIDIA GPUs when we want them. And I think this therefore requires that we put a lot more effort on Dojo in order to ensure that we've got the training capability that we need. So we are going to double down on Dojo, and we do see a path to being competitive with NVIDIA with Dojo. And I think we kind of have no choice because the demand for NVIDIA is so high, and it's obviously their obligation essentially to raise the price of GPUs to whatever the market will bear, which is very high. So I think we've really got to make Dojo work, and we will.
Great. The next question is, what type of accessories will be offered with Optimus?
Optimus is intended to be a generalized humanoid robot with a lot of intelligence. So it's like saying, what kind of accessories would be offered with a human? It's just really intended to be able to be backwards compatible with human tasks. So it would, use any accessories that a human would use. Yeah.
Thank you. The next question is, do you feel you're cheating people out of the joys of owning a Tesla by not advertising?
We are doing some advertising. So,
Yeah.
want to say something?
Yeah, I'll say something. Our fundamental belief is that we need to be providing the best products at a reasonable price to the consumers. Just to give you a fact, in US alone in Q2, over 2/3 of our sales deliveries were to people who had never owned a Tesla before, and which is encouraging. We've spent money on advertising and other awareness programs, and we have adjusted our strategy. We're not saying no to advertising, but this is a dynamic play, and we know that we have not exhausted all our options, and therefore plan to keep adjusting in the later half of this year as well.
Great, thank you very much. The next question is on energy growth, which we already covered in opening remarks. So we'll move on to the next one. What is the updated timeline for Giga Mexico, and what will be the primary vehicles produced initially?
Well, we currently are paused on Giga Mexico. I think we need to see just where things stand after the election. Trump has said that he will put heavy tariffs on vehicles produced in Mexico. So it doesn't make sense to invest a lot in Mexico if that is going to be the case. So we kind of need to see where things play out politically. However, we are increasing capacity at our existing factories quite significantly. And I should say that the cyber taxi, Robo taxi, will be produced here at our headquarters at Giga, Texas.
All right, thank you.
Sorry, as will Optimus towards the end of next year for Optimus production version 2. The high volume version of Optimus will also be produced here in Texas.
Great, thank you. Just a couple more. Is Tesla still in talks with an OEM to license FSD?
There are a few major OEMs that have expressed interest in licensing Tesla Full Self-Driving, and I suspect there will be more over time, but we can't comment on the details of those discussions.
All right, thank you. And the last one, any updates on investing in XAI and integrating Grok into Tesla software?
I should say that Tesla is learning quite a bit from XAI. It's been actually helpful in advancing Full Self-Driving and in building up the new Tesla data center. Regarding investing in XAI, I think we'd need to have a shareholder approval of any such investment. But I'm certainly supportive of that if shareholders are. But I think we need to vote on that. And I think that there are opportunities to integrate Grok into Tesla software. Yes.
All right, thank you very much. And now we will move on to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great, thanks so much for taking my question. And this relates a little bit to the last one that was asked. Elon, I share your strong enthusiasm about AI, and I recognize Tesla's opportunity to do some great things with the technology, but there are some concerns I have about Tesla's commercialization, and that's what I'd like to ask about. Specifically, there were some news stories through the quarter that indicated that you redirected some AI compute systems that were destined for Tesla instead to XAI, or perhaps it was to X, I'm not sure. And similarly, a few quarters ago, if you recall, I asked about your ability to hire engineers in this area, and you noted that there was a great desire for some of these engineers to work on projects that you were involved with, but some of them weren't at Tesla. They were instead at XAI, or perhaps even X again. So the question is, when it comes to your capital investments, your AI R&D, your AI engineers, how do you make allocation decisions among these various ventures, and how do you make Tesla owners comfortable that you're doing it in a way that really benefits them? Thank you.
Yeah, I mean, I think you're referring to a very like an old article regarding GPUs. I think that's like six or 7 months old. Tesla simply had no place to turn them on. So it would have been a waste of Tesla capital, because we would just have to order H100s and have no place to turn them on. So it was just, this wasn't a, let's pick XAI over Tesla. There was no, the Tesla data centers were full. There was no place to actually put them. We've been working 24/7 to complete the south extension on the Tesla Gigafactory here in Texas. That south extension is what will house the 50,000 H100s, and we're beginning to move the H100 server racks into place there. But we needed that to be complete physically. You can't just order GPUs and turn them on with no. You need a data center. It's not possible. So I want to be clear, that was in Tesla's interest, not contrary to Tesla's interest. Does Tesla no good to have GPUs that can't turn on? The split second that south extension is able to take GPUs, which is really just this week. We are moving GPUs in there, and we'll bring them online. With regard to XAI, there are people that only want to work on AGI. So what I was finding was that when trying to recruit people to Tesla, they were only interested in working on AGI, not Tesla specific problems, and they want to do a startup. So it was a case of either they go to a startup, or and I'm involved, or they do a startup and I'm not involved. Those are the two choices. This wasn't they would come to Tesla. They were not going to come to Tesla under any circumstances. Yeah.
Yeah, I mean, I would even add that, AI is a broad spectrum, and there are a lot of things which, we are focused on full self-driving as Tesla and also Optimus. But there's the other spectrum of AI which we're not working on, and that's the kind of work which other companies are trying to do, in this case, XAI. So you have to keep that in mind, that it's a broad spectrum. It's not just one specific thing.
Yeah, and once again, I want to just repeat myself here. I tried to recruit them to Tesla, including to say, like, you can work on AGI if you want, and they refused. Only then was XAI created.
I really appreciate that clarification. If I can ask one follow-up, it relates to the new vehicles that you're planning to introduce next year. I understand this is not the venue for product announcements, but when we think about the focus, I've heard on the one hand that the focus is on cost reduction. On the other hand, you also said that the Roadster would come out. Should we expect other, maybe more limited variants, like similar to the cars that you make today, but with some changes or improvements or different some other variability in the form factors. Should we expect that to be a significant part of the strategy in the next year or two?
I don't want to get into the details of product announcements, and we have to be careful of the Osborne effect here. So, if you start announcing some great thing, it affects our near-term sales. We're going to make great products in the future, just like we have in the past. End of story.
Great. The next question comes from Ben Kallo from Baird. Ben, please go ahead and unmute yourself.
Hi, thanks for taking my question. When we think about revenue contribution and with energy growing so quickly and, Optimus on the come, how do we think about, the overall segments longer term? And then do you think that auto revenue will fall below 50% of your overall revenue? And then my follow-up is just on the last call, you talked about distributed compute on your new hardware. Could you just update us and talk a little bit more about that, the timeline for it, and how you would reward customers for letting you use their compute power in their cars? Thanks.
Yeah, I mean, as I've said a few times, I think the long-term value of Optimus will exceed that of everything else at Tesla combined. So it's simply, if you simply consider the usefulness, utility of a humanoid robot that can do pretty much anything you ask of it, I think everyone on Earth is going to want one. There's 8 billion people on Earth, so that's 8 billion right there. Then you've got all of the industrial uses, which is probably at least as much, if not way more. So I suspect that the long-term demand for general-purpose humanoid robots is in excess of 20 billion units. And Tesla has the most advanced humanoid robot in the world, and is also very good at manufacturing, which these other companies are not. And we've got a lot of experience the most experience with the world leaders in real-world AI. So we have all of the ingredients. I think we're unique in having all of the ingredients necessary for large-scale, high-utility, generalized humanoid robots. That's why, my rough estimate long-term is in accordance with the ARK Invest analysis of, a market cap of on the order of 5 trillion for, maybe more for autonomous transport. And it's several times that number for general purpose humanoid robots. I mean, at that point, I'm not sure what money even means. But, in the benign AI scenario, we're headed for an age of abundance where there is no shortage of goods and services. Anyone can have pretty much anything they want. It's a wild, very wild future we're headed for.
On the distributed compute?
Yeah, distributed compute. That seems like a pretty obvious thing to do. I think where the distributed compute becomes interesting is with our next generation Tesla AI chip, which is Hardware 5, or what we're calling AI 5, which is from the standpoint of inference capability comparable to a B200, an NVIDIA B200. And we're aiming to have that in production at the end of next year and scale production in 26. So it just seems like even if you've got autonomous vehicles that are operating for 50 or 60 hours a week, there's 168 hours in a week. So you have somewhere above, I think, 100 neural net computing. I think we need a better word than GPU, because GPU means graphics processing unit. So there's 100 hours plus per week of AI compute, AI inference compute from the fleet, from the vehicles, and probably some percentage from the humanoid robots that it would make sense to do distributed inference. And if there's a fleet of, at some point, 100 million vehicles with AI 5 and beyond, because you have AI 6 and 7 and whatnot, and there may be billions of humanoid robots, that is just a staggering amount of inference compute that could be used for general purpose computing. It doesn't have to be used for the humanoid robot or for the car. So I think that's a pretty obvious thing to say, like, well, it's more useful than having to do nothing.
All right, thank you. The next question comes from Alex Potter from Piper. Alex, please go ahead and unmute yourself.
Perfect, thanks. Wanted to ask a question on FSD licensing. You mentioned that in passing previously. Was just wondering if you can elaborate maybe on the mechanics of how that would work. I guess presumably this would not be some sort of simple plug and play proposition. That presumably an OEM would need, I don't know, several years to develop its own vehicle platform that's based on FSD. I imagine they would need to adopt Tesla's electrical architecture, compute, sensor stack. So correct me if I'm sort of misunderstanding this, but if you had a cooperative agreement of some kind with another OEM, then presumably it would take you several years before you'd be able to recognize licensing revenue from that agreement. Is that the right way to think about that?
Yes. The OEMs do not move fast. There's not really a sensor suite. It's just cameras. But they would have to integrate our AI computer and have cameras with a 360-degree view, and at least the gateway, like what talks to the internet and communicates with the Tesla system. With that, you need kind of a gateway computer too. So it's really a gateway computer with cellular and Wi-Fi connectivity, the Tesla AI computer, and 7 cameras, or enough cameras to get a 360-degree view. But this will, given the speed at which the auto industry moves, it would be several years before you would see this in volume.
Okay, good. That's more or less what I expected. So then the follow-up here is, if you did sign an FSD licensing agreement with another automaker, when do you think you would disclose that? Would you do it right when you sign the agreement, or only after that multiple years has passed and the vehicle is ready to be rolled out?
I think it depends on the OEM. I guess we'd be happy either way.
Yeah, it depends on what kind of arrangement we enter into. A lot of those things we've not ironed those out yet. So we'll make that determination as and when we get to that point.
Right. And the kind of deals that are obviously relevant are only if, some OEM is willing to do this in 1 million cars a year or something significant. It's not if it's like 10,000 or 100,000 cars a year. We could just make that ourselves.
All right, thank you. The next question comes from Dan Levi from Barclays. Dan, please go ahead and unmute yourself.
Hi, good evening. Thanks for taking the questions. First, wanted to start with a question on Shanghai. You've leveraged Shanghai as an export center, really due to its low cost, and that makes sense. But maybe you can just give us a sense of how the strategy changes, if at all, given the implementation of tariffs in Europe. Also, to what extent your import of batteries from China into the US, how that might change given the tariffs. Thank you.
Yeah, I think I covered some part of it in my opening remarks, but just to give you a little bit more, just on the tariff side, the European authorities did sample certain other OEMs in the first round to establish the tariffs for cars being imported from China into Europe. While we were not picked up in our individual examination in the first round, they did pick us up in the second round. They visited our factory. We worked with them, provided them all the information. As a result, we are adjusting our import strategy out of China into Europe. But And one other thing to note is in Q2 itself, we started building right-hand Model Ys out of Berlin, and we also delivered it in UK. And we're adjusting as needed, but we will keep adjusting. We're still importing Model 3s into Europe out of Shanghai. And we are still evaluating what is the best alternate to manage all this. Just on the examination by the European authorities, like I said, we cooperated with them well. We are confident that we should get a better rate than what they have imposed for now. But this is literally evolving, and we are adjusting as fast as we can with this. It is. I would also add that, because of this, you've seen the impact that Berlin is doing more imports into places like Taiwan, as well as UK I just mentioned. So it will keep changing, and we will keep adapting as we go about it.
Great.
Thanks. Yeah, thank you. As a follow-up, I wanted to ask about the robotaxi strategy, and specifically the shareholder deck here notes that the release is going to be one of the gating factors is regulatory approval. So maybe you could help us understand, which regulations specifically are the ones that we should be looking for. Is it FMVSS that's standard? And then, to what extent does the strategy shift you've done with FSD more of a nationwide, no boundary approach? Is the robotaxi approach one that's more geofence, so to speak, and is more driven by a state-by-state approach?
I mean, our solution is a generalized solution, unlike what everybody else has. If you see it like Waymo and whatnot, they have a very localized solution that requires high density mapping. It's quite fragile. So, their ability to expand rapidly is limited. Our solution is a general solution that works anywhere. It would even work on a different Earth. So if you rendered a new Earth, it would work on a new Earth. So there's capability. I think in our experience, once we demonstrate that something is safe enough or significantly safer than human, we find that regulators are supportive of deployment of that capability. It's difficult to argue with if you've got a large number of, if you've got billions of miles that show that in the future unsupervised FSD is safer than human. What regulator could really stand in the way of that? They're morally obligated to approve. So I don't think regulatory approval will be a limiting factor. I should also say that the self-driving capabilities that are deployed outside of North America are far behind that in North America. So with version 12.5 and maybe 12.6, but pretty soon we will ask for regulatory approval of the Tesla supervised FSD in Europe, China, and other countries. And I think we're likely to receive that before the end of the year.
Thank you.
Which will be a helpful demand driver in those regions, obviously.
Thank you.
Just to add to that, Travis, in terms of as Elon said, in terms of regulatory approval, the vehicles are governed by FMVSS in the US, which is NHTSA, which is the same across all 50 states. The road rules are the same across all 50 states. So creating a generalized solution gives us the best opportunity to deploy in all 50 states reasonably. Of course, there are state and even local municipal level regulations that may apply to, being a transportation company or deploying taxis. But, as far as getting the vehicle on the road, that's that's all federal, and that's very much in line with what Elon was just suggesting about the data and the vehicle itself.
And to add to the technology point, the end-to-end network basically makes no assumption about the location. Like you could add data from different countries and it would just like perform equally well there. There's like almost like close to zero US specific code in there. It's all just the data that comes from the US.
Yeah, to that end, Ashok, it's like, we can go as humans to other countries and drive with some reasonable amount of assessment in those countries. And that's how you design the FSD software.
Yeah, exactly.
Great, thanks guys. The next question comes from George from Canaccord. George, please go ahead and unmute yourself.
Hi, everyone. Thank you for taking my questions. Maybe just to expand on the regulatory question for a second, and I could be comparing apples and oranges, but GM canceled their pedalless, wheelless vehicle, and according to the company this morning, their decision was driven by uncertainty about the regulatory environment. And from what we understand, and again, maybe I'm wrong here, but the Robo taxi that has been shown, at least in images of the public, is also pedalless and wheelless. Is there a different regulatory concern just if you deploy a vehicle like that doesn't have pedals or a wheel, and that may be different from just regular FSD on a traditional Tesla vehicle? Thank you.
Well, obviously, the real reason that they canceled it is because GM can't make it work, not because of regulators. They're blaming regulators. That's misleading of them to do so, because Waymo is doing just fine in those markets. So it's just that their technology is not up to par.
Right. And maybe just as a follow-up, I think you mentioned that FSD take rates were up materially after you reduced the price. Is there any way you can help us quantify what that means exactly? Thank you.
Yeah, I mean, we've shared we've seen a meaningful increase. I don't want to get into specific because we started from a low base, but we are seeing encouraging results. And the key thing here is, like Elon said, you need to experience it because words can't describe it till the time we actually use it. And that's why we are trying to make sure that every time a car is getting delivered, people are being showed how this thing is working, because when you see it working, you realize how great it is. I mean, just to give you one example, so again, there's a biased example, but I have a more than 20-mile commute into the factory almost every day. I have zero interventions on the latest stack, and the car just literally drives me over. And especially with the latest version, wherein we're also tracking your eye movement, the steering wheel nag is almost not there, as long as you're not wearing sunglasses.
Well, we're fixing the sunglasses thing. It's coming soon. So you will be able to drive. You'll be able to have sunglasses on and have the car drive.
Yeah.
But there's a fair number of times I've talked with smart people who like live in New York or maybe downtown Boston and don't ever drive, and then are asking me about FSD. And I'm like, you can just get a car and try it. If you're not doing that, you have no idea what's going on.
Thank you. The next question comes from Pierre from New Street. Pierre, please unmute yourself.
Hey guys, thank you for taking my question. So it's on Robotaxi again, and I completely get it that with a universal solution, we will get like regulatory approval. We get there eventually, clicking up miles and compute, etc. And my question is more, how you think about deployments? Because I'm thinking once you have a car that can drive everywhere, that can replace me, it can replace a taxi. But then to do the ride-hailing service, you need a certain scale. And that means a lot of cars on the road. And so you need an infrastructure to just maintain the cars, take care of them, etc. And so my question is, are you already working on that? Do you have already an idea of what like your plan to deploy looks like? And is that like a Tesla only plan, or are you looking at partners, local partners, global partners to do that? And I'll have a quick follow-up.
Yeah, this would just be the Tesla network. You just literally open the Tesla app and summon a car, and we send a car to pick you up and take you somewhere. We'll have a fleet that's, I don't know, on the order of 7 million that are capable of autonomy soon. In the years to come, it'll be over 10 million, then over 20 million. This is immense scale. The car is able to operate 24/7, unlike the human driver. So the capability to, like, there's this basically instant scale with a software update. And now this is for a customer-owned fleet. So you can think of that as being a bit like Airbnb. Like, you can choose to allow your car to be used by the fleet, or cancel that and bring it back. It can be used by the fleet all the time. It can be used by the fleet some of the time, and then Tesla would share in the revenue with the customer. But you can think of the giant fleet of Tesla vehicles as like a giant sort of Airbnb equivalent fleet, Airbnb on wheels. Then in addition, we would make some number of cars for Tesla that would just be owned by Tesla and be added to the fleet. I guess that would be a bit more like Uber. But this would all be the Tesla network. And there's an important clause we've put in every Tesla purchase, which is that the Tesla vehicles can only be used in the Tesla fleet. They cannot be used by a third party for autonomy.
Okay. And do you think that scales like progressively, so you can start in a city with just a handful of cars and you grow the number of cars over time? Or do you think there is like a critical mass you need to get to be able to offer like a service that is of competitive quality compared to what like Uber would be typically delivering already?
I guess maybe I'm not conveying this correctly. The entire Tesla fleet basically becomes active. This is obviously, maybe there's some number of people who don't want their car to earn money, but I think most people will. It's instant scale.
Thank you. Our next question comes from Colin from Oppenheimer. Colin, please unmute yourself.
Sorry about that, guys. I've got two questions around energy storage. With the tight supply and the stationary storage, can you talk about your pricing strategy and how you're thinking about saturation in given geographies, given that some of these larger systems are starting to shift wholesale power markets in a pretty meaningful way quickly?
So we are working with a large set of players in the market, and our pipeline is actually pretty long, and there's actually a long end in terms of where you enter into a contract to where delivery starts happening. And so far we have good pricing leverage, and I'll have Mike chime in on this too.
Yeah, there's a lot of competition from Chinese OEMs, just like there is in the vehicle space. So we're in close contact with our customers and making sure that we're remaining competitive in where they're needing to be competitive to secure contracts to sell power and energy in the markets. We had a really strong contracting quarter and continue to build our backlog for 2025 and 2026. So we feel pretty good about where we are in the market. We realize that competition is strong, but we have a pretty strong value proposition with offering a fully integrated product with our own power electronics and site level controls. So
yeah, and again, the aspect which people do not fully understand is that there's also a whole software stack which comes with our Megapack.
Right.
And that is a unique proposition which we have, which is only available to us, and we're using it with other stuff too. But that gives us a much more of an edge as compared to the competition.
Yeah.
Yeah, we find customers that they can sort of put together a hodgepodge solution, and then sometimes they'll pick that solution, and then that doesn't work, and then they come back to us.
Yeah, and we're not really seeing saturation for like on a global scale. There's little pockets of saturation in different markets, but we're more seeing that there's markets opening up given demand on the grid just continues to increase more than anyone expects. So that just opens up markets, really across the world in different pockets.
Yeah, I mean, just even on the AI compute side, right? These GPUs are really power hungry, and the amount of new pipeline which we're getting for people for data center backup and things like that is increasing at a pretty large scale.
Yeah.
Thanks so much. And then the follow-up here is around the 4680 process technology, and the roll-to-roll process. There's some news around your equipment suppliers. Can you talk about how far along you are in potentially qualifying an incremental supplier around some of those critical process technology steps?
Yeah, I can talk about that. As you're probably referring to the lawsuit that we have with one of our suppliers. Look, I don't think this is going to affect our ability to roll out 4680. We have very strong IP position in the technology, and the majority of the equipment that we use is in-house designed, and some of it's in-house built. And so we can take our IP stack and have someone else build it if we need to. So that's not really a concern right now.
Yeah, I think people don't understand just how much demand there will be for grid storage. They really just like the people, I think, are underestimating this demand by probably orders of magnitude. So that the actual total energy output of, say, the U.S. grid is, if the power plants can operate at steady state, is at least 2 to 3 times the amount of energy it currently produces, because there are huge gaps. There's a huge difference in the from peak to trough in terms of energy or power generation. So in order for a grid to not have blackouts, it must be able to support the load at the worst minute of the worst day of the year, the coldest or hottest day, which means that for the rest of the time, the rest of the year, it's got massive excess power generation capability, but it has no way to store that energy. Once you add battery packs, you can now run the power plants at steady state. Steady state means that basically any given grid anywhere in the world can produce, in terms of cumulative energy in the course of a year, at least twice what it is currently producing. In some cases, maybe 3 times.
All right, thank you.
This is a very profound thing.
Thank you, Elon. The next question comes from Colin Langan from Wells Fargo. Colin, please unmute yourself.
Oh, great. Thanks for taking my questions. Do you hear me?
Yeah.
Yeah.
Oh, okay, good. Sorry. I guess I'm going to ask, if Trump wins, there's a higher chance that IRA could get cut. I think, Elon, you had commented online that Tesla doesn't survive on EV subsidies. But when Tesla lose a lot of support, if IRA goes away, I think Model 3 and Y get IRA help for customers, and I think your batteries get production tax credits. So just can you clarify if IRA ends, would it be a negative for your profitability in the near term? Why might it not be a negative? And then, any framing of the current, support you get IRA related.
I guess that there would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term, probably actually helps Tesla. That would be my guess. But I've said this before on earnings calls. the value of Tesla overwhelmingly is autonomy. These other things are in the noise relative to autonomy. So I recommend anyone who doesn't believe that Tesla will solve vehicle autonomy should not hold Tesla stock. They should sell their Tesla stock. If you believe Tesla will solve autonomy, you should buy Tesla stock. And all these other questions are in the noise.
Yeah, I mean, I'll add this just to clarify a few things, that at the end of the day, when we are looking at our business, we've always been looking at it whether or not IRA is there. And we want our business to grow healthy without having any, subsidies coming in, whichever way you look at it. And that's the way we have always modeled everything. And that is the way internally also, even when we're looking at battery costs, yes, there are manufacturing credits which we get, but we always drive ourselves to say, okay, what if there's no IRA benefit? And how do we operate in that kind of an environment? And like Elon said, we definitely have a big advantage as compared to our competition on that front. We've delivered it, and you can see it in the numbers over the years. So there is, you cannot ignore the fundamental sides of the business. And then on top of it, once you add autonomy to it, like Elon said, it becomes meaningless to even think about the short term.
Okay. I think that's unfortunately all the time we have for today. We appreciate all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye.
Thanks, man.
Okay. Woo. Okay, some bangers there, some really good information. Let's go through the panel here. What did you guys hear? Jeff, do you want to start?
There's a number of things I heard on the call. In general, this is to Tesla. This is a 90-day check-in that they would prefer to not have to do. They would just prefer to continue, to send out the shareholder deck and move on. But they're not working in 90-day chunks. I mean, portions of their business work in 90-day chunks. Obviously, to optimize inventory, cash, and so forth, they're the best in the industry at doing that. But everything that honestly that they were commenting on, they weren't commenting on is inventory going to go from 18 to 15 deal? It wasn't really anything about that, or even the next quarter. It was about getting the full autonomy and getting licensing FSD, and so forth. So I think there's this audience bias issue of the story they're telling isn't an every 90-day story chunk that's going to satisfy the people on this call. And then the numbers aren't great. If you look at just EPS and you look at revenue, it's not like they're knocking it out of the park. There's some things that are encouraging, but in general, this is a story of over the next, call it 6 to 18 months, the company will look completely different. And you have to believe that they're going to achieve some or all of those objectives. Otherwise, you wouldn't be in the name. And if they achieve some or all of those objectives, like Elon was saying, basically, these conversations of, are we getting, this % credit on batteries? Are we getting, it would just be in the noise. So, I mean, that's my overall summary. There were some big statements on the call. Obviously, I think the biggest in my mind is that they have multiple partners now in conversation to license FSD. As they get closer and closer, and as the performance of FSD improves, they get more training capacity. This is why you see CEOs of other EV companies from China making the trip, sending their teams, them coming over here to drive FSD themselves and understand it. So the fact that there are multiple major OEMs in conversation, they may not all come through, but now this is a shots on goal thing, and this could continue to grow, kind of like the charging piece of it did as well. So look for more on that. I think that was one of the bigger things. The other big thing was we're doubling down on Dojo. I want to talk about this for a minute because I've been in the rooms during these conversations at other companies. I've driven the strategy. I understand kind of what I think is happening here. One is there was a statement that Tesla and Elon are very appreciative of what NVIDIA is able to do today, the performance of their product, what they've supplied, and so forth. But to me, there was a clear now shot. The positioning on the negotiation has changed. Last year, Tesla did not have their allocation of GPUs from NVIDIA. They did not. They didn't have anything, and they know they needed it. So it's just shut up. Dojo is a less than 10% probability of success. Meanwhile, there's R&D, there's CapEx. It's going. Now they've got a significant amount of NVIDIA hardware. They've got a significant amount on order, and they've got their place in line. And part of this conversation was we don't like what we're paying. It's exorbitant, and we're not getting the supply we need when we need it. So there was a little bit of that was a message. You don't say that on an earnings call unless you want the other company to hear it, which is, can you help me on pricing? Can you help me on supply? And oh, by the way, we're unfortunately, without help on pricing, without help on supply, we're going to double down on our own solution. And so you were just witness to one of the biggest negotiations maybe this year on supply and cost for Tesla. The other big statement, tripling energy output with Shanghai, which means these factories are not standing still. They're becoming more efficient, more output per square meter. And the new factory may be significantly bigger, but they may be getting more output out of Lathrop. So those are some of the big ones. Optimus production. To me, that's just he called it Optimus version 1, which to me means it's the Tesla Optimus, the one for internal use, internal testing, and then there'll be a version 2 for the rest of the world. So to me, they're still in the development process, and they'll just produce a couple thousand for the factories next year. But it's nice to hear that they're starting that in the early part of this coming year. And then just a minor statement on COGS would have been sequentially lower without Cybertruck.
Who wants to go next? Nobody? You want me to go? Who's going to go next? Come on.
I'll go next.
Yeah.
I'm going to say that I don't think the Elon I wanted to turn up today turned up.
Yeah.
I think that it was, instead of the focus on why people don't understand FSD and just go and try, instead of that, we should have had the new book. Guys, let's tell you about this new book. We're seeing the end of the old book. This is the end of the story, but this is what's coming next year. And we're not going to talk product, but we're going to have all these new models. We're going to use these production capacities that we've built. We're going to drive down cost. The whole story that we told last quarter was the story that I expected to hear the second chapter on. Not the end of the story, but the second chapter, leading into, the end of the story that's coming on 10/10. I mean, he threw away 10/10 like just in a sentence. The wrong Elon told the story, the same story, but it could have been told in such a different way and with such a different approach, which was what he told us last year. So I think that's what's impacting the stock price more than the poor results, and they were poor results. more than the poor results is, just try FSD, or, this thing about people don't understand autonomy. He's got an incredible story to tell. The OEMs are lining up to license our FSD. We have the new book starting next year. We have this fantastic product lineup coming. I don't want to talk product, but I tell you guys, it's great. And FSD is going to be with us next year. This is the year. I kept on telling you it was coming by the end of the year, but I'm telling you next year, it's here. That is what I expected or hoped or wished to hear. Now, we did hear some very important points, and I think Jeff picked the most important points. I can't stress enough the importance of people talking to him about licensing. I would expect that a lot of OEMs are talking to them about licensing. I don't expect them all to sign up, because what are they doing? They're kicking the tires. But the truth and the reality is they have nothing to offer. Nothing to offer for their own people have nothing to offer. So I think we're going to see, that improve. So I heard the things I wanted to hear, but I didn't hear what I think the analysts would have liked to hear. So that's my take. And I think the stock is going to go down.
Okay. I'll go next, Cern. Because what I'll do is I'll summarize the key points. I get what you're saying now, Larry. At first, I was kind of questioning you, but you're saying that, Elon, the way he delivered it was wrong. But if we just go to the points that he made, okay, he made points about Robotaxi, he made points about the compute, and he made points about the bot. And so let's go through the route. So Robotaxi, he's unveiled, he's communicated it's 10/10. So that was something we all wanted to do. So that means it's not really that delayed further than everybody thought. You said earlier that it might be January. It's 10/10. That's very good news. Then he said that my prediction is overly optimistic in the past, but we should get miles per intervention be high enough in excess of humans, unsupervised, by the end of this year. Shocked if not next year. Okay, it's his statements again. We're all getting, okay, we could take that with a grain of salt, but he's saying I can see a possibility that unsupervised FSAs by the end of this year. That's pretty big. He said the Cyber Robotaxi will be produced here at Giga Texas, as well as Optimus end of next year. That's the high volume V2 version. There are few major OEMs expressed interest licensing FSD. I suspect more over time. I can't say more about this. I guess it's a few major OEMs. And then he clarified that it would need to be millions, not just 10,000. So that means it can't be something like a Ford that can only do 10, 20, or 200,000. It needs to be something big that can do millions. That's why these major OEMs, it's a very specific major OEM that has to be set up this. He say that the outside of the North America FSD is still behind that of North America, but pretty soon we will ask for regulatory approval, and we believe we'll get it for China and Europe. We'll likely get that by the end of this year. So FSD itself. And
supervised FSD.
Supervised FSD. But he said several times, and I've been saying this many times myself in many shows, that I believe that supervised FSD is a demand driver. He said it 3 times today. It's a demand driver. So forget Robotaxi, just supervised FSD. You're going to see sales significantly rise because as they show how good it is. He said the Tesla network, you can summon a car, you got the 7 million cars is capable, be instantly on. This does speak to the prediction that I think that all of you said except me, which is that when they do turn this on, he made it sound like he's going to turn it on whichever state agrees to it, as opposed to piloting first with a small group of cars that they own. It looks like he's really going to go that route. The Tesla becomes active and it'll be instant scale. He said the compute is nearing completion of South End, 80,000 H100s and 100,000 hardware 4 AI5. Okay, there's an AI5, which is they're already working on that. He said that won't be ready until a year and a half from now, but now it's looking like they're actually testing it. So that's their own chip. That's not Dojo, but that's their own chip that they're testing in their own area. He did say we will double down on Dojo. The demand is so high, blah, blah, blah. We need to make Dojo work, and we will. Optimus, we expect Optimus. This one, I think it sounded like to me that he pushed back because what he said 2 days ago was different from what he said today. He said, Optimus, we expect Optimus production, version 1 limited production early next year. For Tesla consumption, we expect to have several thousand by end of next year, 2026, ramping up production and producing robots to excel customers. It sounded like it got pushed a year from what I interpreted the last statement they made. So those were what I got. CERN.
From my perspective, Wall Street loves to be spoon-fed, and Elon is not a spoon feeder. So analysts are going to be frustrated because questions weren't answered. They didn't get the information they want. They're so focused on the short term. It's the same old story. And here's Elon trying to, maybe in a flawed way, however, we could be critical about how he communicates this. He's trying to communicate a grand vision. He said on the call, the long-term value of Optimus will exceed that of everything else than Tesla combined. Right. So I'm, as I look at it, using Optimus internally in 2025 and selling externally in 2026 is pretty exciting. That might mean 18 months from now, right, we start to see external sales of Optimus to the first customers. 2026 sounds like a long time away, but 18 months doesn't. So that to me is very exciting. Now, of course, there's a lot to learn about how Optimus will be priced and what the business model looks like, et cetera, et cetera. But again, analysts have not done any work on this yet, or very few of them have. And they just seem unwilling to even entertain the idea. So at some point in the next 18 months, that's going to hit them in the face. Between then and now, it's likely that Robotaxi goes live. And again, you can hear that Elon's very frustrated with the questions around Robotaxi, about the strategy. Now, on 10/10, I would imagine we're going to hear a lot more about this and how they envision running the network. And he really didn't want to address those questions on this call. Right. In the meantime, we're left worrying about the cross currents of tariffs, the ramp of the Cybertruck, demand in China, EV adoption hangover, I think, as they put it. A change in, an administration here in the United States from one regulatory view to another, and so on. Do you start a factory in Mexico, or is that just a waste of time if the next president's going to come in and, it's not going to be favorable? So these are all the things that we're left to worry about, because Elon is not spoon feeding us the information on everything else. But we all know, we've all seen, the strategy is clear. Like he lets us see little bits of it here and there, right? When it's time, when it's ready. And often it's one ex post, right? It's a photo of something, it's a photo of something else. Today, releasing a couple of photos of the Dojo computer. Anyway, that's my takeaway. I think a lot of people are going to be disappointed with this call. To me, the consistency of what they're saying and what they're doing is present, and I'm excited about the future of Tesla. This company is heading towards some amazing things.
Couldn't agree more. It is the most exciting company I've ever invested in, and it continues to be so. And it's totally not understood at all by the analysts. And I don't think we're going to see Elon bend the knee to these guys. He's going to continue being who he is, and it's just going to have to be a show them situation. So,
and he's pointing to the only analysts that are, meaningfully maybe outside of Morgan Stanley, doing a cross business analysis of the company, not just looking at auto. So there's very few analysts out there. So when you see the questions, everything's kind of like auto gross margins, or what's the tariffs going to, going to do this or that. And Elon's saying, look, there's a higher order bit to the work that we're doing. I think the difference, and I see people in the comments too, like, oh, the stock is 229, it's 220. The leadership of the company isn't looking at, is it down 3 or 4%? They're not looking at that. They're articulating what the long-term vision is, and these are the steps along the way. You can say like, oh, we're just trying to do whatever with the call. The earnings, if it's a 90-day earnings call check-in, it's not a great earnings call. I think we've all said that. But everybody that watches this show, that are comments on X, whatever, they all have different investment horizons. If your investment horizon is a day, a week, or what have you, you're doing calls, well then right. This isn't, Tesla earnings calls aren't for you, because you're just not honestly going to get that. But I think the most unwritten takeaway from the call, and it wasn't asked by analyst, but you can put 2 and 2 together. Tesla has never installed capacity that they didn't have a plan to utilize. And again, if you just listen to me for a second and believe me from experience, when Tesla posts their capacity, they post their installed capacity, there's some movement either way on that number. But in general, a high functioning, highly profitable manufacturing operation will target 80% utilization. So if they say they're getting, you can read the earnings deck, and you can look at their installed capacity, and you can look at where they say they're growing it to. If they're growing installed capacity to 3 million units, they're probably going to use something on the order, call it 2.5 to 2.8 of that installed capacity. And again, it's a moving target. It's not one number for the entire year. Tesla just took their efficiency in Shanghai from 42 seconds per vehicle to 30. That's a 28% improvement. It's not a moving target, but if you just look at the broad strokes of what's happening here, they think they're getting to 3 million units capacity. They think they're growing production by 50%. Tesla only carries 18 days of inventory. They don't do what GM just did, which is build 2 vehicles and only ship 1. So if you put all that together, they believe they're meaningfully growing in volume next year. And I think that they believe it's, these vehicles that are coming out, there's either something super special about the design, the market fit of these vehicles. We know they're going to be a few $1,000s cheaper. There's either something super special about these vehicles, or it's autonomy, getting the full autonomy, coupling those together, and the lower rate environment backdrop. Like those 3 things together, when you do long-term planning, you think through these things. When you have these multi-billion-dollar factories and these multi-billion-dollar capex budgets, you think through the rate environment, you think through your product roadmap, you think through all these different things. So them making this decision and saying that they have this amount of installed capacity, they believe they're going to use it. So I think that's the most unwritten, kind of undiscussed thing from the call is why do you think you're going to use that much capacity year over year? What is changing in your mind?
I wanted to point out that earlier when we were having this meeting, you said, Jeff, you got to read a little bit in between the lines. If you listened a little bit in the lines, he said this. He said, Cyber Robotaxi will be produced here at Giga Texas, as well as Optimus end of next year high volume V2. So he kind of tagged on the Optimus, but he said that was going to be the end of next year. So it kind of might mean that the Cyber Robotaxi is going to be produced at Giga Texas next year.
Yeah. In the earnings deck, they say the capacity minus the next generation, the new product line. So they're talking about the capacity increase minus those future CapEx investments for that. So yeah, I believe that, in the second half of next year, they're going to start producing the Cybercab. I think that's the plan. I think we're going to see a physical prototype, and they're going to be at Industrial Design Lock in October when we see that. And then the next year, they're going to complete development and go into production.
Right. That's right.
I think we're going to see more than the Cybercab.
Maybe.
I said this before, Herbert doesn't believe me, but I'm going to turn him into a believer because Tesla, Elon said tonight that we will see the Cybercab and a few more things.
Yes.
A couple of more things.
Yeah.
Now, when he
I
says a couple
disagree
of
now.
more things, pardon?
Larry, I disagree now.
Well, you're all
Yeah.
welcome to disagree, but I'm.
Now I'll
know,
tell you why. I'll tell you why. If this event was in November, December, January, then I would agree with you. But I don't think that they're very sensitive to Osborne. And Elon mentioned it on the call. He's mentioned it in multiple tweets. I don't think they're going to show a vehicle that's meaningfully cheaper, that looks amazing, that has all this capability, 48 volt everything, and then just drop it in October and say, well, this is coming. Then, well, why anybody going to buy a 3 or Y for the next 6 months until they get the peak run rate? So I don't think they'll show it.
Okay.
Well, we'll see.
I've got a question to you guys, right? And this is regarding the OEM of licensing. I want to repeat this because I thought this was really important. When can we get unsupervised FSD? He says by the end of this year. Shocked if not next year. And then the event is 10/10. Then he goes, there are a few major OEMs expressed interest licensing FSD. I suspect more over time. Then he goes, it's got to be 1 million cars per year, not just 10,000. So this is not just any OEM. It's got to be a big deal OEM. Do you guys have a prediction of who you think it might be?
It's going to be one of the major Chinese companies. I can't believe it's a US company because he's talking about very big volumes. Yeah. I mean, it could be, a European manufacturer, which would make sense. He talked about a couple, and I would not be surprised if it's a couple of Chinese and one European. That's my guess. That would be my guess. Volkswagen would be the natural, because Volkswagen are so desperate for something. They're talking about using Rivian's, operating system. They're talking about their own company. I mean, they're all over the show, but that would fix their problem, but I don't think they're going to do it. But anyway, that's, the other company that is a real possibility is the French Renault. I mean, why would Renault not?
Larry, it's got to be 1 million. He goes millions, not just 10,000.
Renault millions. Renault is the third largest manufacturer in Europe.
They make millions?
Oh yeah. You have no idea. I mean, every car in France is a Renault.
Okay.
Yeah.
I'm assuming though it's millions of BEVs, not just
exactly.
Renault has the largest BEV line in Europe. I mean, I'm not talking about all of Volkswagen's Chinese cousins and brothers. I'm talking about Renault as a manufacturer. I mean, they are ahead in many respects of every other OEM in Europe.
Yeah, I think it's going to be BYD and someone like a VW. I think those are two partners. I think Tesla respects those that are really investing the R&D, the time, and energy to drive electrification, and they don't want to. When they decide to work with a partner on FSD licensing, whether that partner ships 1,000 cars or ships 1 million cars, the kind of work that they have to do is equivalent. So they want a return on investment, and there will be upfront engineering costs to enable this, and Tesla will be making money before these companies go into production and sell their vehicles and start selling the service. They will be making money from these companies in something called non-recurring engineering funds, NRE, and maybe other ways as well. So yeah, I think it'd be BYD and someone like a VW. Unless you believe Ford and unless you believe GM by 2026 or 2027 are going to be at 1 million unit run rate. That would be the bet you'd have to make.
Okay, I'm gonna one last question. I think it's a big one, which is if you guys again listen to what he said here, right? And I know he didn't deliver it well, but if you just stop and write, I wrote down every sentence he said, right? So he said, "Robo taxi. If you're a Tesla investor and you don't believe in autonomy, don't invest." So right off the bat, he's saying don't Tesla is about the future. We're about to do autonomy and robotaxi. He said Dojo. Okay, he kind of played both sides of it, but he said that it's going to be as competitive to the B2 or the wait. He said the AI 5 will be as competitive to the B200s of NVIDIA. And then he did say that Dojo, so I'm trying to find exact words he said, but something like, it's going to be, oh yeah, we will double down. We see a path that we can be competitive to NVIDIA. Here's Tesla creating a business that could be competitive to NVIDIA. That's two. Optimus, he said many times, it's going to be the larger than everything else. It can do everything, all that. And then finally, he ended with, you know, everybody here, the earnings call is looking at it the wrong way. If you're worried about these IRAs and all that, you're totally missing the point. This is about autonomy. All this is meaning like little tiny concepts. So that tells you that that's where his head is. And if you're an investor and you don't believe him in either Dojo or Robotaxi or robots, yeah, then you're focused on the wrong things. What's your thoughts on that?
On the B200 comment, remember B200 is in production at the end of this year and shipping to customers. Sorry, in production now and shipping to customers by the end of this year and for installation. And so if AI 5 is not ready until the end of next year, I mean, there's still a gap for them to fill. But I think Tesla's approach on Dojo, remember, NVIDIA has to make a more generalized solution when you look at, you know, they have many solutions, but in general, they're working on a kind of a generalized solution for their GPUs. And then they have some things where they're doing some more precise work. Tesla's working, you know, the reason Tesla did the computer for their car is that NVIDIA option would have been much more expensive. You had to pay them a margin and you would have had the performance of everyone else. Tesla has something that works at under 100 watts. They don't have to pay anybody a margin, and that's why they got probably $1,000 or $1,200 of total costs in their car to enable autonomy in the vehicle. So, I mean, the AI 5 is interesting. I think what it means is Tesla thinks they're catching up to NVIDIA in about 2 years. Within 2 to 3 years, that is actually a major announcement. NVIDIA moved lower as soon as Elon started talking about the concerns they have with supply and the concerns they have with cost and the fact that they have to double down on Dojo because Tesla and XAI are a huge buyer of NVIDIA products. So there was a market reaction due to that.
Pretty minor. Yeah.
Oh.
Well, you know, by the way, 2.3 million cars what Renault sold, but they sold 270,000 EVs last year, and they're going to do about 25% more this year. They're going to be a force to be reckoned with. I think that they're the kind of manufacturer that would. They don't have electronics strategy at this point, and I think that's an obvious solution for them. They're the third largest in Europe, but I think they're growing faster than all the others put together, actually. Yeah, so I think you're right, Jeff. I think that, you know, we will see some very significant changes, and I think it's coming early next year, and I think the ability of Tesla to concentrate their production into those factories, into those 3 factories, will make a huge impact on gross margin. And I think that's the reason that Elon cut the strategy for Mexico, cut the strategy for the unbox process, and moved into this interim phase. I think that the key for Tesla is going to be, you know, how they roll out the new products for next year and the speed at which Robotaxi evolves into a final, you know, releasable or approvable product is going to determine where in next year there's going to be a transition in the stock price. Because until the market becomes a believer, there's not going to be that transition, notwithstanding all the frustration on the long-term Tesla shareholders' behalf. So,
Okay, comments, sir?
The good news is we now have October 10th to look forward to. And I suspect that we might see a cyber cab, we might see a cyber van, and we might even see the Roadster, although it doesn't really fit with that date, but for fun, you said some other products, maybe.
He said Roadster's next year.
Yeah, but I'm saying, that's not Osborning anything, right? Whereas the compact vehicle unveil, it won't happen on 10/10, right? You don't want to roll that out until you're pretty much ready to sell it.
Yeah.
So it's an exciting future ahead. Unfortunately, a lot of these things don't work on the time scale that all of us impatient people are focused on. But they're moving at lightning speed compared to their competition.
Yeah, I go back to that. I know it's XAI, but 19 days from receipt to ramp up, and then they're gonna have to do this again with the Texas cluster, which is going to be bigger. This is what smart purveyors and capital allocators do: is they measure the time to peak value of any investment that they make, whether you're ramping a new product or phone or car, or in this case, you've bought this capital from NVIDIA and from other companies, and you have these assets, whether it's Supermicro or Dell, you have NVIDIA, you have all these people that have to come together. And what's the best use of capital is to figure out how you get from 0.0 to full-on production and useful capacity as quickly as possible. So then you can send that support away and you can start generating returns as quickly as possible. So that's a very smart capital allocator to measure that time to peak value and get it into 19 days. I'm assuming he's going to try for something faster, even in Texas. And this is what you want. Tesla takes capital, and they're very efficient in terms of their use of it. The same way they made that decision, for the next generation vehicle, given the current climate. Quite frankly, we're not going to be at 2% interest rates, in the first half of next year. If we are, something's wrong. So you'll still be dealing with interest rates, but they should be lower. So they made it. Tesla is looking at kind of the macro landscape and making decisions based off of it, but they're not. They're obsessing. They're looking at Mexico. They're looking at some of these other things, and I think they're making good decisions. I wouldn't be building a Mexico factory if there's a high probability that we will be putting significant tariffs on product made there. And so, yeah, I think they are considering these factors, but in general, they're kind of keeping this North Star around autonomy and humanoid robots, and that's where the significant growth in the company and the transition in the company starts to occur.
Okay. Thank you, everybody, for joining us. This was a 3-hour marathon. Very great contributors from all these just brilliant minds. So appreciative of you, Jeff, Larry, and CERN. Follow all of them at X, the Jeff Lutz, at Tesla Larry, and CERN Basher. You'll get the deepest analysis you could possibly get. I'm very fortunate. Appreciate you guys. Follow up next time. Bye-bye.
Thank you, Herbert.
Thanks, Herbert.
Good. Thanks, everybody.